motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः प्रकाशितः सर्वज्ञानविदितश्च एतद्द्वैत एतद्द्वैत एतद्द्वैत
Friends, I, Vivek Agarwal, convener of ACCA Study Circle, welcome you all for this 2-day session on bank audit. And we have none other than Abhijit sir with us to give a welcome note on the bank branch audit and what are the issues we all face. So without further ado, I would request Neeraj Harodia ji, member of ACCA Study Circle, to formally introduce Amajit sir and welcome him. Over to Neeraj.
Thank you very much, Vivek. You have given me a very tough task, and it's like कि मुझे सूरज को दिया दिखाना है. So, but it's our process. So, C. Amarjit Chopra ji, almost from 5 decades in this profession, is senior partner in GSN Associates. He has successfully completed recently PhD on the topic NPA management in banks, a comparison of public and private sector banks in India. He is also past president of ICI. At present, he is serving as independent director in Tata Power Delhi Distribution Companies Limited, Tata Power Trading Company, SBI Mutual Fund Trustee Company Limited, Roop Auto Limited, Accounting Research Foundation. He is having very keen interest in sports and music. So his introduction is too long, but due to paucity of time, just with the folded hand, now I'll request sir to deliberate on this very important topic at this point of time, and we all are aware that how this topic is going to help all of us in conducting and in formulating our duties through bank audit. So sir, once again I sincerely welcome you on behalf of ACA Study Circle, and you are always my mentor, my teacher. So sir, it's my request. Thank you very much.
Thank you, Neeraj. How much time I have got?
Sir, time is yours. 15-20 minutes aram se.
No, because there should be another speaker also.
Yeah, Gokhale sir is there. So 15-20 minutes, sir. 15-20 minutes.
Hanji?
15 से 20 मिनट से कम से
15 to 20 minutes sir.
इसका मेरा?
हाँ जी सर जी.
मैं 15 से 20 मिनट बोलना ना सिर्फ.
जी.
See, let me first thank ACA Kolkata Study Circle for this invitation, and of course Neeraj is there. इनके तो मैं इसके बारे में कुछ कहना ही नहीं चाहता, बच्चा अपना. और आई थिंक हमने जो वैष्णो देवी की ट्रिप्स इकट्ठी की और जो इन्होंने हमें भजन सिखाए हुए हैं वो आज भी हम कभी कभी गुनगुना लेते हैं. गा तो हम सकते नहीं, हम सिर्फ गुनगुना सकते हैं, गा तो यही सकते हैं बेसिकली उन भजनों को. And all the participants, I can see about 78 participants, including me, in this particular webinar today. See, this year's audit, branch audit, हमेशा important होता है, tough भी होता है. पर इस साल ज्यादा टफ इसलिए क्योंकि अपॉइंटमेंट आएगी भी या नहीं आएगी यार, ये बड़ा भारी प्रश्न है हमारे सामने। क्योंकि रिजर्व बैंक ऑफ इंडिया ने पहले 90% एडवांसेस का ऑडिट होता था बैंकों में, अब 80% कर दिया। ये रिड्यूस होने से, विद दिस रिडक्शन, I think I have been told that I should be speaking in English. Thank you very much, Mr. Murthy. I will speak in
ईयरफोन
English
भूल ही
because
गवा
I
दे यार,
thought,
खबर
no,
ना
no, I
पड़ी।
thought that it is only being of ACA Calcutta, but if it's going somewhere else also, I would like to speak in English. The point that I'm trying to drive you home is that Reserve Bank of India has reduced the auditable advances from 90% to 80%. And has not told the banks that minimum advances of 80% have to be audited. They said within an overall ceiling of 80%, you consult your central auditors and then decide the policy. So there is a lot of difference between minimum 80% and within an overall ceiling of 80%. I think this is a very important factor that we need to keep in consideration. A very significant number of branches are going out of the audit as a consequence thereof. Few of the banks that I have been told very clearly, Canara Bank is one, Union Bank is another one, and some of the smaller banks also. There will be no vacancies this year. Now, if there is no vacancy in bank like Union Bank, there is no vacancy in a bank like Canara Bank, and probably there could be no vacancies in Bank of India also. You can well imagine what kind of problems are going to be there. Canara Bank has said that probably they might be finding it difficult even to adjust it amongst the existing auditors, for that matter. But that's a very serious issue. But one thing I have been saying for ages, whenever I've talked of, I think each one knows my approach in this particular matter. I've been saying that all those of us who have been basing their practice on branch audit or tax audit, it will not work. It cannot work. Because this year, Reserve Bank of India has reduced it to 80%. You don't know next year or next to next year, they may bring it down to 70% or any other percentage. There are many reasons for it. We have already seen it in the case of the tax audit, that earlier the 40 lakh was the turnover and it remained for ages basically. But then when they pushed it up from 40 lakh to some level, now you can see what is the level. So once the reduction has started from 90% to 80%, it could be now coming down from 80% to some other percentages. Only the time will tell what happens. And I can dare say one thing, all those who are basing their practice only based upon the branch audit and tax audit probably don't live in this fool's paradise. You cannot do that. You will not be able to survive based upon that. You have to create, you have to look for some other opportunities, and creation should be in any case. But institute can also play its role only when we do a creative job. That's also you can be rest assured. Because one of the reasons for the reduction in the number of branches to be audited, merely it is not the IT systems introduction which has led to this, because it is being felt at some levels that probably we have not been able to create the value addition, which we should have done. People at different points are treated it as an annual lottery or annual bonus. And I think this has done an immense harm, immense damage so far as the profession is concerned, or this opportunity is concerned. I can also tell you that because of the IT, and RBI has very clearly laid down that by 30th June 2021, all the banks had to create systems by way of which all NPA identification had to be done through the system and it cannot be manual. That would also lead to this kind of position. So far, Whenever the Reserve Bank of India would say that we want to reduce it, we will go to them and tell them, and they will take an argument that in the case of the ICICI Bank, IDFC Bank, Axis Bank, etc., the central auditors conduct the audit and no branch audits are conducted. Why it is required only in the case of the public sector banks? We were having an argument. And the argument was plain and simple that these banks were born in the era of IT. Whereas public sector banks were born when the IT was not there. The records were manual. And today also, in the case of the public sector banks, the loan and advances records and certain other records are still to be digitized. And if those records are not digitized, these cannot be audited at the central level. For that, the branch audit is a must. But suppose after 3 years, which I don't rule out the possibility at all, after 3 years, if the banks digitize their records, public sector banks also digitize their records, then the central auditors will be able to conduct the audit sitting over at the central level. So the branch audit future is not as bright as we have been thinking of. Rather, it's quite gloomy, it's quite bleak. So that is why I am suggesting it. And the one argument that they have been taking, which is an unfair comparison, if you really ask me, the ministry and IBA and the RBA has been taking, that the audit fee in the case of the public sector banks is 10 times to 15 times higher compared to the private sector banks. That one has been telling them that when you talk of the central auditor's fee, it is higher because of the fact that the central auditors also conduct the branch audit in the case of the public sector banks. And the maximum fees because of that, a very significant percent, I will not say maximum, but a very significant percentage of the audit fee of the central auditors is in relation to those 3 branches or 4 branches that they do, each one of them does. But then the government has been asking one question: is it the cost of the nationalization that the public sector banks has to bear? Whereas it is not the case of the private sector banks. Why I'm telling you all this is only to bring to your knowledge as to what is there in future, what is looming large in future basically before us, and the writing is on the wall. We may or may not accept it. That's a different matter. This time, the opportunities, the vacancies are going to be minimal, virtually negligible. I think if at all there will be vacancies, this will be in the case of State Bank of India. And I'm told that there are few vacancies even in the case of the central bank. I don't know in any other bank if at all there are vacancies. But what happens out of the 13 banks if there are vacancies only in 2 of the banks? We have been reduced from 28 banks to 13 banks, and now the vacancies are only in 2 of the banks. You can well find out what is in store for us. And the one thing that I will say is, whenever we tell them that if you reduce the number of the branch audits, then the number of frauds could go up in those branches. Their argument is plain and simple. Please come back and tell us in how many branches the branch auditors have ever reported a fraud. And I'm sorry to say, the institute or we have nothing to comment thereupon. We can't counter that particular argument. Because it's a matter of fact that the branch auditors have not reported frauds. The branch auditors have been taking shelter under one thing, that the branch manager does not allow me the time, the DGM does not allow me the time, the GM does not allow me the time, he does not allow me to report. Can this work? Let's put a hand on heart. The moment you say this, that the branch manager does not allow me, the question comes in, then what happens in the case of the tax audits or the audits of the private sector companies? And why those audits are also required? Will any promoter allow you to qualify the reports? If you cannot qualify the report in the case of a branch audit, how will you qualify the reports in the case of a private company? I think all these arguments are not going to work, that the branch manager does not allow me the time, or the DGM does not allow me the time, or the GM does not allow me the time. The question which is being asked to us is, in how many cases the MOCs are given by the branch auditors? What is the quantum thereof? One may say that we have given large number of MOCs, but what is the quantum of the total MOCs? Is it material to the size of the bank? These are all very important questions which we'll have to answer ourselves. And if we don't answer to ourselves, something else is going to happen. Let's be very clear. So my folded hands request to you, and I'm saying with folded hands. Whosoever gets the audit this year, existing auditors will continue. But whosoever has to conduct the branch audit this year, please conduct it qualitatively. Fill up the information which is required in the long form audit report. Give the MOCs as much as possible. Not jabardasti nahi dena. Not that I want to give an MOC, so I should give MOC. Not that way. But if an MOC is justified, why you should be under pressure from any of the officials of the bank that this MOC is not to be given? And why only time factor in the case of the private, in the case of the public sector banks we crib about? What happens in the case of the tax audits? In how many cases we all conduct the tax audits in the month of April, May or June? All tax audits are being conducted. We all know what happens in the case of the tax audit. Even on 30th September at 5 p.m. a person comes and his tax audit is conducted. We all know it pretty well. And I'm being blunt about it. I'm not hiding my feelings. I don't hide my sentiments. The reason being, the moment we go before these authorities, they question us on these grounds. That when you come for the work, you should also talk of the value addition. You should talk about the quality. You should talk about the contribution by way of these audits. And if we fail to do it, and we have no answer to that, let's be very clear, because when the facts and figures are put before us, we can't contribute, we can't give it. So the point that I'm trying, Mr. Kamal Jana is saying that probably I'm not audible, but if I'm audible to the others, I'm audible. So the point that I'm trying to drive you home is, please, for the sake of the profession, be prepared that this year you got bigger branches, but if you give MOCs next year, you may get slightly smaller branches. Let's do it for the sake of the profession. It's must under all circumstances. We just can't keep on doing what we have been doing. The past practices have to die out. I think we have to be awake now. Awake to the ground realities. There are other professions in the waiting. Like in the case of the stock audits, if we did not do certain things in the way that these were desirable, the cost auditors have been brought in. I think somewhere or the other, the opportunities will slip away from our hands. But I am very sure that I will not say that all the members do it, but some of the members, but a good number of us don't resort to the right kind of practices. So my humble request again is, please devote time, please give a qualitative job, please make sure that we do work in the right direction. This year, Reserve Bank of India has brought in a lot of changes also, and I will try to touch it upon very quickly. I know my time factor because I've been given about 20-25 minutes. I think after that the president will come in. One of the changes which has been brought in by Reserve Bank of India this year is that when you go to the bank, you have to make sure that all those forms which used to be blank are filled up properly. Reserve Bank of India has told the bankers that in case of all the new advances, all the forms have to be filled up before 31st of December 2021. And in the case of the old advances, as and when the renewal takes place or review takes place, all those columns have to be filled up. The columns were not being filled up for the rate of interest. The columns were not being filled up for the security value. The columns were not being filled for the repayment dates, etc., etc. Reserve Bank of India has instructed by way of 12th November circular to all banks that you have to make sure that all those columns are filled up. And if these columns are not filled up, report the manner you want to report it. Nobody stops you because there is no way. And so far as the new advances are concerned in that particular case, do it. In the case of new advances, all those columns are to be filled up. Why it has been done? It has been done primarily because of the fact that in number of suits, the cases which are being filed, the banks have lost the cases because the borrowers could prove that these were not filled up at the time of the sanction or renewal of the loan. These have been filled up now after filing the case. Because there were discrepancies in those documents. The inks were different. So now it has been said very clearly, the bank cannot write that I grant you a moratorium of 3 years. Let them write that it is a moratorium of 3 years, but then they should mention from which date the repayment starts. And they have to fill in this particular column primarily because of the second reason which I will come to. They have to give the due dates of the repayment, and this has to be fed into the system because now the Reserve Bank of India has laid down by way of this circular that the special mentioned accounts process has to be completed every day, not at the end of the month, not at the end of the quarter. What are special mentioned accounts? Special mentioned accounts are those where there are certain kind of irregularities. SMA 0 account is one where there is an irregularity ranging from 1 day to 30 days. SMA 1 account is one where there is an irregularity ranging from 31 days to 60 days, and SMA 2 account is that where the irregularity runs from 61 days to 90 days. RBI has very clearly said in the circular how much time it will take to the bank to do this daily end process is not important, but the daily end process has to be completed with regard to the special mentioned account. Every day you have to find out how many accounts are in the SMA 0 category, SMA 1 category, SMA 2 category. Very, very important factor. The reason being, they have also said NPA will be done on the date on which the 90 days have been completed. It will not be done at the end of the month. It will not be done at the end of the quarter. They said NPA status has also to be determined on a daily basis. If you run SMA process on a daily basis, NPA process will automatically fall in place. And you mark my words that in the case of all bank reports, we mention very clearly, we have been mentioning it clearly that all prudential norms have been complied with. Prudential norms will be complied with only when the NPA accounts are identified through the system. I'm using the word through the system, not manually, on a daily basis. Now, if you start looking at the advances statement given by the bank management and the date of NPA is 31st March, 30th June, 31st of July, it is not acceptable because the due dates for payment of the interest or payment of the principal need not necessarily be the month end. This could be the 15th of month, it could be the 12th of the month, this could be the 10th of the month, and the moment the 90 days period is completed, the account gets into some other category. And it has very clearly said in this circular, the due date becomes the overdue date. If the interest is interest is due on 30th, and if it is not paid on 30th at the end of the day, it will be considered to be overdue on that particular day. Earlier, what the banks were doing? Earlier, the banks were telling us that 30th is the due date and 1st is the overdue date. There is nothing there. If it is not paid by the end of the day, it becomes overdue on that day. It's as simple as that, because it was due on this particular date. That is what the argument of this 12th November circular is there. In the case of the term loan also, they said that if you have debited interest in the case of the term loan, earlier the interest in respect of the term loan, if the interest was debited, the 90 days period would be counted from the end of the month. They said nothing doing, no 90 days period from the end of the month. 90 days period from the date of the debit of the interest. The entire scenario changes. Mark my words. Entire scenario has undergone a change after this particular circular. And this circular is going to create lot many problems so far as the banks are concerned. So what I am supposed to see? Firstly, I will definitely go to the bank and find out whether the bank has a system wherein the SMA accounts can be identified on a daily basis or not. NPA can be identified on a daily basis or not. If it is cannot be done, how the prudential norms can be met? Prudential norms require on a daily basis. So please don't say that the prudential norms have been complied with in those cases where it cannot be done. And the other thing that one will like to tell you is that in the case of cash credit accounts, the major problem will be in the case of the cash credit accounts to you. Because in the case of the cash credit accounts, earlier the wording was if the debit of the interest, if the credits in the account are not sufficient to meet the debit of the interest at the end of the balance sheet date, they have done away with the date, with the words at the end of the balance sheet date, at the balance sheet date. There's no such words now. It means if the interest was debited and in the next quarter, in the next 90 days period, the credits are not sufficient to meet the debit of the interest, the account would have to be classified as NPA, and this system should identify this. The system should also make sure, that if the account has not been renewed or reviewed for a period exceeding 180 days, the account should automatically become NPA. It means the date of the renewal, the due date of the renewal of the account should be fed into the system. You should be able to find out whether those due dates have been fed into the system or have not been fed into the system. If these have not been fed into the system will not be able to identify. Similarly, if the DP has been calculated based upon a stock statement which is more than 180 days old, then also the account has to be classified as NPA. It means the stock statements must be fed onto the system on a regular basis. And it must very clearly say how old is it. And if it is more than 180 days old, and if it does not identify that account as NPA, it means the system is incorrect. The integrity of the data is doubtful in those cases. So be very clear so far as this issue is also concerned. The other thing that one will like to say is upgradation of the accounts as NPAs, from NPA to the standard category or from doubtful to the substandard category. It very clearly, earlier what was happening, I will give you first that example and then come to this. Earlier what was happening, suppose X had borrowed certain amount, X had 4 facilities in the bank. X had the term loan, X had the cash credit facility, X had the bill discounting facility, X had the packing credit facility. And if one of the facilities became NPA, suppose term loan became NPA because of the fact that he could not pay the principal and interest in time. In that particular case, what would happen was that all facilities would become NPA. But then what he used to do, on one particular day, he will regularize the term loan account and say, now my term loan is perfect. So all facilities should become performing. RBI has clarified it very clearly in 12th November circular. If your account has become irregular on account of any facility, then if you want to upgrade that account to the correct, to the earlier position, in that particular case, all the facilities have to be regular on that particular date. I will give you the example. What does it mean? Suppose your term loan had become NPA and because of that, all the other facilities became NPA. Now your cash credit is overdrawn. It is exceeding DP or it is exceeding the sanction limit. It is exceeding the sanction limit. Now you say that I have cleared the term loan account, so all my facilities should be upgraded because cash credit is not irregular for a period of more than 90 days. They say nothing doing. If you want your account to be upgraded, first you regularize the term loan also, you regularize the cash credit also. It is not a matter whether the cash credit account has been irregular for a period of 90 days or more, or the cash credit is only regular for a period of 15 days or 20 days. They say first come with clean hands to us. All facilities should be clear. All facilities should be truly regularized under all the circumstances. Very important feature. And in the case of the restructured accounts, where DCCO, etc., have been shifted, changed, or any other kind of restructuring has taken place, this circular makes the life very difficult for the banks and the borrowers, and for us also. Earlier, what used to happen, that an account has been restructured, you will wait till specified period, and when the specified in the specified period, if the amount has been received as was stipulated, which was not less than 20% of the principal plus capitalized amount of interest, in that case the account could have been upgraded, but not before a period of 1 year. Now what they have said is, they have introduced in between a monitoring period also. And monitoring period is, I have said 12th November. I have said 12th November is the date of the circular. And the other thing that I would like to say is that in the case of the restructured account, what has been said now very clearly is that if the account has been restructured, now a concept of monitoring period has been brought in. In the specified period, the amounts which was to be brought in by the party was to be paid by the party to get the account regularized or upgraded was minimum 20% of the capitalized amount of the principal or the capitalized amount of the interest. In the case of the monitoring period, it is 10% of the principal and the capitalized amount of the interest. But this is not all. The difficulty is, earlier what used to happen was that the account would continue under the restructuring also with some kind of defaults, but before the specified date, I would have paid all the 20% of the principal or capitalized amount of interest, or maybe a slightly more amount, and I will say that my account needs to be upgraded, and it used to be upgraded. Now it says whether in the monitoring period or in the specified period. If your account is under default even for 1 day, if the irregularity is even of 1 day, there has to be no default at all. It is not the total amount of principal or interest to be received during the specified period or during the monitoring period. What is more important is that under no circumstances during this period there should be any kind of irregularity. Under no circumstances your BP should be exceeding, or the principal should be in area, or your interest should be in area on any day, except in the case of MSMEs, where it has been said even if it has been overdue for a period of 30 days, it will not be considered to be a failure of restructuring and it could still be upgraded. But in the case of the non-MSME accounts, if there is on any day during the specified period, on any day during the specified period, if there is a default of even 1 day, though at the end of the specified period you have paid the full amount which you are supposed to pay, the account cannot be upgraded. I think very tough provision, very, very tough provision, if you ask me. And how will you catch hold of it? Through the system now. Through the system. That the system should specify, number one, what will be the specified date? What will be the specified period? And then you have to gauge whether at the end of the specified period that amount has been received or not. And during the specified period, if this account was under SMA 0, SMA 1, SMA 2 on any date, the account cannot be upgraded. Another provision which they have brought in, which they have changed is, and which is again justified, very frankly, if you ask me, a justifiable change, a good change, which will give some relief to the borrowers, some relief to us, some relief to the banks also. They said that suppose you sanction a particular loan. The bank sanctioned a particular loan, saying that this is the moratorium period. for the payment of interest. An interest moratorium was set for a period of 2 years or 3 years or whatever period it was. After the moratorium period, the account became NPA for certain reasons. And the amount of interest which was incurred during the moratorium period was accrued by the bank, because bank is entitled to accrue the interest in the case of the moratorium period. During the moratorium period, whatever interest is to be accrued, they can accrue it and take it to the income. And we all know that unrealized amount of interest, when the account is termed as NPA, the unrealized amount of interest is to be reversed when the account is classified as NPA. But in the case of the moratorium interest during the moratorium period, Reserve Bank of India has given this relief this time. They said whatever interest was accrued during the moratorium period and has not been received, but the account has become NPA. Interest during the moratorium period debited by the bank and taken to income need not be reversed. Because they said that at that time the bank had already envisaged, they had actually taken into consideration that the company does not have the cash generating capacity to pay the interest. So it was a part of the project cost, more or less. This is one of the major changes which has been brought in this year. These are some of the significant changes, but to me, most significant change will be when I talk of daily identification of NPS, when I talk of daily identification of SMA 0, SMA 1, SMA 2, when I talk of the filling up of the blank forms, because what was happening that I was writing moratorium period of 3 years, but I was not giving what was the date of the repayment. Whether it is the date of the repayment from the 3 years are from the date of the sanction, 3 years are from the date of the disbursal, 3 years are from the date of the delivery of the letter, sanction letter to the party. Capable of different interpretations. So that confusion has been removed. Even to the extent they say that if you have fixed the EMI in the case of the term loans, you should give the dates of the EMIs in the system and should also give the breakup how much of this EMI is of interest and how much is of the principal. Not going to be easy. Life for auditor is not going to be a bed of roses in the times to come. It was never a bed of roses. But last few years have made it a life of thorns, if you ask me. Now it has become really problematic. My humble submission is, when you go to the branch audit this time, don't go to the branch audit without reading the circular of 12th November and 15th February 2022. 12th November 2021 and 15th of February 2022, and of course the master circular dated 1st of October 2021. I will not, because my address was only limited to this. So thank you very much, Vivekji. Now your other. Thanks a lot to the participants for a very patient hearing. That's all I can say.
Thank you, Amarjit sir. And as you were saying that many banks will not be having vacancy for new auditors.
Yeah.
Many banks will not be having vacancy for new auditors. Just to inform, UCO Bank is also not having any vacancy for new auditors.
I know it, but I cannot name every bank. That's my problem.
So, and
I know that UCO Bank also doesn't have any vacancy. I know that.
We were like
probably even Bank of India may not have any vacancy.
Correct, sir. Correct, sir.
Probably.
And moreover, few people are saying that whatever fees was received last year, whether we'll receive this year, over there also there is a doubt, because the number of branches allocated to the auditor
This is a possibility that existing auditors may also have it their cut from
Correct.
3 branches to 2 or 2 to 1. I don't know what will happen, but something is definitely going to happen.
Correct, sir. Correct. Okay. So thanks a lot, Amarjit sir. And you rightly said, because we have to somewhere also pull up our socks, and it is only time is there where we see that branch audit will no more be there. with every year bank coming up. Last year they had it because of the COVID and other reason, but now we see 10% reduction every year. I think this year also they were thinking of
No,
doing
I
it.
will not say every year it is going to happen 10%. That I don't agree with you.
But this year they were fighting.
This year 10% is there.
Yeah.
Next year it may or may not happen.
Okay.
But I personally feel that after 3 to 5 years, this percentage will definitely again come down. That I am very clear. So suppose it is brought down to 60%, what will remain?
Correct, sir.
But my humble submission to the institute is, and this is what I am talking, I have talked to the Honorable President also, that we must fight for one thing, and we must at least take up one issue, not fight, we must take up one issue, that whatever advances are there in the asset recovery branches, because in the whatever advances are there in the stress management group, those advances are hardly to be checked for, because no interest calculation is to be taken care of. Only there you have to check the securities, basically, whether the securities are available or not, or the valuations are available or not. So we should say that those advances should be excluded for the purpose of 80%. If those get excluded, the vacancies can arise. That's all I can tell you.
Sir, just a small question.
Yeah.
Sir, by when can we expect the allotment to come?
I think latest by Friday, the letter should start coming in. So far as the existing auditors are concerned, Union Bank has already sent the letters. If I'm not mistaken, Canara Bank has already sent the letters to the existing auditors. And in the other cases, I think State Bank of India should be deciding by Wednesday what is going to be done. All audit committee should happen this Wednesday or Thursday. After that, the letters will start coming in.
Because there is not much time left, I mean, to plan and...
Hardly any time left.
Yeah.
After that, even 78 people may not be available for the seminars.
Just to inform, sir, we had this seminar placed on 22nd because by this time we expected that the letter would come to the people.
No, I know that. I know that because I was also expecting that letters would come in, but because of this change in policy, the RBI delayed it. Because we were also representing, institute was also representing, they wanted to reduce it to 70%. By lot of persuasion, it has gone up to 80%.
Yes, sir. So one more question, like being as one of the central auditor, we are fighting with the bank that 80% is the minimum they are required to do, as you were saying, whether it's a minimum or overall, and we are trying to take like net advances 80% we have to take, or the gross advance 80%. So being one of the central auditor, can we fight and say that why we are taking the NPAs only, and we should take 80% of the net advances, not the gross advances? There is a although Rba circular, the letter which RBI has sent to the bank, it says that it's 80% of the gross advances, but for a better sample size and the better representation of the advances, can we fight for that? Just understanding.
No, I think you are on the wrong footing somewhere or the other. Let me be very clear about it. It has to be of gross advances, but I think gross advances should not include the accounts which have already been identified as NPAs, basically, particularly which have been transferred to ARBs. That is what I am saying. That's all my saying. I am not talking of net NPAs or I am not talking of gross NPAs. I'm talking of the gross advances, but gross advances should not include those advances. That is the point I am trying to raise. I'm very clear so far as that particular issue is concerned. And the other thing that I will like to say is that these are problematic days.
That's for sure. Thanks a lot, Amarjit sir, for joining at ACA Study Circle and giving your valuable time. It is always a pleasure to have you. And this time with digital world.
Thank you very much, boss, giving me a memento with a smiling face. That's all I can say. And of course, एक तो नीरज हो कहीं पे तो ना कहना मुश्किल है, और वैसे भी कलकत्ता वालों के लिए ना कहना मुश्किल है. I think I have got that kind of an affinity for the Kolkata people or Eastern India regional people. पर्टिकुलरली सुबोध अग्रवाल जी के साथ जो मेरे रिलेशनशिप है, और मेरे तो पहले प्रेसिडेंट जो थे वो राहुल रॉय जी थे. Unfortunately, that gentleman is no more there, but he was my first president when I entered the council. So I think I've got a great affinity so far as the Eastern India Regional Council is concerned. और अभी आपके जो तीनों रीजनल काउंसिल, आपके जो तीनों सेंट्रल काउंसिल मेंबर्स हैं, I think I enjoy the best of the bonds with them, whether it is Devashish President sir or the two Central Council members Sushil or Ranjit ji for that matter. Sushil ji को तो आज मैं सुबह भी मिला हूँ. ठीक है. Okay, Priyank ji.
Thank you so much, sir. I think Vivek has some issues probably, so he's he had to log out.
I think Vivek has lost the touch.
Yeah.
So thank you very much. Bye.
Thank you so much, sir. It is always a pleasure. I mean, at this time
Bye.
of the year, hearing you on bank audit.
I think I was able to meet the requirement of Mr. Murthy because he wanted me to speak in English only. हालांकि जब ईस्टर्न रीजन में आता हूँ तो मेरे को हिंदी में बोलने का मन करता. Anyway, thank you. Bye.
So with this, we move on to the next speaker. Our next speaker for the day is CA Dhananjay Gokhale ji. So I'll just introduce him. Dhananjay sir, yes, you're here. CA Dhananjay Gokhale is a Bachelor of Commerce from University of Mumbai and a fellow member of ICAI and is into practice in the last 25 years. He is a founder partner of the firm Messrs. Dhananjay J. Gokhale and Company, Chartered Accountants, specialized in providing management consultancy and auditing and assurance services in corporate and banking sector. He is also a co-opted member of AASB of ICAI for financial year 18-19. He has been nominated as a subgroup member of the Banking, Insurance and Pension Committee, WIRC, ICAI for the year 18-19. He is also the convener of the study group formed for ICAI Guidance Note on Audit of Banks 2019 edition. He was also a special invitee at the AASB of ICAI for financial year 21-22, deputy convener of study group formed for ICAI Guidance Note on Audit of Banks 22 edition, member of an expert panel constituted by AASB of ICAI for addressing the bank audit queries of the members since financial year 11-12. He's authored various articles in the ICAI magazine, ICAI Guidance Note on Audit of Banks, Manual on Concurrent Audits, background material for Executive Master's Program, etc. He's handled a variety of assignments related to arena of bank audits, including stats, central audit of PSBs, and merger and acquisition of urban cooperative banks, and as a consultant to Board of Bank. He's a regular speaker at various seminars and forums. He's also been a speaker at staff training seminars organized by public sector, private sector, and the Urban Cooperative Banks and Association of Banks. With this, I welcome you, sir, Dhananjay sir, and we're all eager to hear, So over to you, sir. Vivek has also joined. Vivek, if you want to add something.
No. We thanks Dhananjay sir for accepting our invitation and sorry for technical problem at my end. Without further ado, he has been waiting along and he's the best person we can get for NPA review pan India. And he has been very busy whenever we have this branch audit and bank audit sessions. And I've heard him at the ICAI CP programs also, or ICAI Central Auditors program also. So without further ado, over to Dhananjay sir.
Thank you, Priyanji, and thank you, Vivekji, for inviting me over here. And I will try to cover as much as possible, within the time frame which is available. So I will like to touch upon the major changes which are done. So I will, give more attention to that part. Frankly speaking, let me just give you a little background about what has really got changed before we start off with the topic. In reality, there are hardly any changes which have been really done by Reserve Bank of India, even though the bankers are perceiving that there are a lot of changes which have been made. The reality is far from different. Just to give an example is, RBI is now stipulating or they are harping upon daily marking of NPAs, which was the norm even in earlier year also. So if we talk about March 21 audit also, the same norm was there. So nothing has really got changed, except that there are few things wherein the IRAC norms have been slightly tweaked. So we will talk about that also. But when you are conducting audit, just keep in mind that IRAC norms were earlier also on the same lines, and now also the major theme of IRAC norms have remained same. So this is a broad coverage which I'm having with the presentation. I will try to cover as much as possible, but at the same time, I will distribute this PPT to the study circle so that you can get this PPT as a kind of a reference material. So a couple of RBI circulars which are issued in the last year and which you need to keep a tab on that. First thing is that the master circular has got issued almost after a gap of 6.5 years. So the last circular was issued in July 15 and we are having now October 21 circular which has got issued. Subsequently, after the master circular got issued, strangely RBI issued two circulars. One was 12th November 2021 dated and another one was 15 February 2022 dated. Both circulars are clarificatory in nature. And the only thing which have been added or change in IRAC norms which were given in October 21 circular is 12th November circular, wherein IRAC norms have slightly changed. Otherwise, both circulars have to be considered as a kind of a clarification. Nothing new has been introduced by RBI. Then we have another circular, that is master direction related to relief measures by banks in areas affected by natural calamities. The master direction is same, which was issued in October 18, and the same provisions will apply even in the current year. Another important circular is Prudential Framework for Resolution of Stress Asset, which was issued in June 19. That circular has now been incorporated in October 21 circular in para 9. But if someone wants to read that in entirety or have a elaborate commentary of that resolution plan for stress asset, one should refer to June 19 circular itself, because para 9 of October 21 is a little cramped actually, in the sense it's not really reproducing the entire circular in entirety. Then we have relief measures for MSME borrowers, wherein the RBI has issued multiple circulars, and in the same series, the new circular of 5th May 2021 has got issued. Only thing which have got changed in this circular is that the earlier circular, that is the 6th August 2020 circular, was having a sunset clause of 31st March 2021. So the extension is given for availing the benefit up to 30th September 2021. Otherwise, all the conditions remain same. This is a list of circular which was issued earlier in the last year by Reserve Bank of India related to COVID-19 pandemic. Couple of circulars which might be useful in the current year are like 6th August 2020 circular and 17th September 2020 circular. 6th August circular was a resolution framework 1.0 for COVID-19 related stress. 17th September circular was defining the financial parameters which are required to be achieved by those borrower accounts who have undergone resolution framework 1.0. 13th October was FAQs which were published by Reserve Bank of India. In the same continuation, RBI has issued multiple circulars in the current year also. So first circular, that is a set of circulars, is of 5th May 2021. There are two circulars which are issued. One is for MSME and second one is for individual accounts and small businesses which are not covered under MSME. So it's more of extension which is given to the resolution framework 1.0, which was issued in October 2020. Then we have 4th June circular, wherein the aggregate exposure cap for MSME borrowers have been increased from 25 crores to 50 crores. Then 7th July circular is the one which is now extending the definition of MSME to include the retail traders and wholesale traders. So that is one important circular which has got issued. And then there is a 6th August 2021 circular, wherein the timelines for achievement of financial parameters have been extended to 31st March 2022. These financial parameters were defined in 17th September circular. So the 6th August circular is only a kind of a extension period which is given to achieve those parameters. So these are all circulars which have got issued. So now let's start with the basics of IRAC norms. As far as classification is concerned, RBI is expecting that the bank should follow the classification norms with objective criteria. And when RBI is saying that there is an objective criteria which has to be followed, a corollary of that is that it means that there is no subjectivity in IRAC norms. Secondly, the criteria which the bank is adopting for classification of advances, that has to be followed in a uniform and consistent manner. Now, when we talk about provisioning part, provisioning will depend upon what is the classification of advance. So that is the first and foremost thing. So if it is a performing asset, the provisioning is only prudential and at a very low rate. If the accounts are NPA, then the next important question which we need to ask is, what is the period for which the account has got classified as NPA? Because based on that, substandard DA1, DA2, DA3 categorization will be defined. Now, once we decide the category of NPA accounts, Then the next thing is that we need to analyze whether the security is available or not. And if the security is available, what is the realizable value of that? Now here we need to consider the realizable value and not the fair value as far as provisioning norms are concerned. Broadly, assets are divided into two types. One is performing asset, second one is non-performing asset. As far as definition of performing asset is concerned, these are the assets which are not non-performing, but to be very precise, non-performing assets are typically the assets which are carrying the risk which is more than normal banking risk. As compared to that, performing assets are those which are carrying the risk which is not more than normal banking risk. Now, what is meant by normal banking risk? Normal banking risk is an inherent risk which is bound to be there in case of any entity which is engaged in lending business. So whenever you are lending any money to any other person, there is an inherent risk of realization which will be always there. So that is a normal banking risk. Beyond that, if there is an additional risk which is involved, then in that case, the account will be required to be marked as NPA. So let me give you a couple of examples of that. As all of you are aware, the normal NPA norms are related to 90 days delinquencies. Like if the account is continuously overdrawn beyond 90 days, or if there are installments which are overdue beyond 90 days, we mark that account as NPA. But there are norms which are going beyond these 90 days delinquencies. So let me give you a couple of examples of that. Let's presume that there is a project loan which is sanctioned, and in case of project loan, there is a date of commencement of commercial operation which will get defined. What is that DCCO means is, DCCO is the date by which the borrower is supposed to achieve a target of starting off of commercial operations. Now, if it doesn't achieve that target, if it doesn't start off the commercial operations by that DCCO, it means that there is a higher risk which is perceived related to that particular account. And in that case, what will happen is, because of this higher risk which is involved, the account will get classified as NPA, even though the account is otherwise regular, or even though the account is yet to meet that 90-day delinquency norm. So this is one such example. Let me give you another two examples. Another example is that suppose there is a immovable security which is given as a security to the bank, and as compared to the earlier valuation, your current valuation is disclosing a value of that security which is having a deterioration beyond 50% as compared to the earlier valuation. So in that case, you need to classify that account as under doubtful asset category. Let me give you a third example. Let's presume that you are having a secured loan, which is very much within the limit. There are no overdues in that account, but the security value, the underlying security value related to this secured loan is less than 10% of the ledger outstanding balance. So in that case, you need to classify that account straight away under loss asset category, because there is a higher risk of realization which is perceived because of shortfall of security value which is available. So these are just few examples wherein it is perceived that there is a higher risk than normal banking risk, and you need to classify that account under NPA category. Now let's look at the normal norms which are defined based on category or type of loan. Let's start with the term loan. In case of term loan, if the interest or installment, if it remains overdue for a period of more than 90 days, then that term loan account will be classified as NPA. Now here the most important word is overdue. So as far as term loan account is concerned, firstly, there has to be an amount which is overdue. Unless and until an amount is not overdue in that term loan account, the account will never get classified as NPA. Now how to calculate overdue component? As you are aware, for every term loan account, there is a repayment calendar which is prescribed by the bank. Based on that repayment schedule, you can derive at ideal drawing power as on any cutoff date. So what you need to compare is, you need to compare the ledger balance with your ideal DP. And if your ledger balance is more than ideal drawing power, the differential is called as overdue component. Now that overdue component, you need to compare or you need to test with 90 days parameters. So let's presume that you are having an EMI based loan. So the overdue amount divided by EMI will give you number of EMIs which are overdue. So if the number of EMIs which are overdue are beyond 3, naturally you will mark that account as NPA. If they are up to 3, the account is still within 90 days. It is not overdue beyond 90 days, and the account will remain into standard asset category. Now, a few things which are very vital which you need to keep in mind. Just to reiterate, firstly, the account should be overdue. So let's take a sample case. Let's presume that we are having a housing loan borrower, and the borrower has prepaid 12 installments in the month of April itself, and subsequently doesn't pay any installment. So if you look at the account, it will appear that there is a lump sum credit which is appearing in the account which is equivalent to 12 installments. Subsequently, there are only debits in the account in the form of interest. Now, in such scenario, at the end of the year, you should not conclude that because of non-servicing of interest, the account should be marked as NPA, because there is no concept of non-servicing as an NPA criteria. So what you need to verify is that whether the account is overdue or not. So what you need to compare is ledger balance. You need to compare with ideal DP. Since he has prepaid the installments, naturally his ideal DP, when you compare that with ledger account, the ledger account balance will be always less than ideal DP. So the account will remain into standard asset category because there is no overdue component. There is a portion of unserviced interest, but on an overall basis, there is no overdue amount in that particular account. So the account remains into standard asset category. Then there is a concession which is given in para 2.1.3. What that para stipulates is, let's presume that we have a loan account with a term wherein for first 6 months period, there is no principal repayment which is prescribed, but only interest is payable in that 6 months period. So in such scenarios wherein there is no principal which is repayable, but only interest is due and payable. So in that case, the interest which is due and charged in a quarter, if it is not serviced fully within next 90 days from the end of the quarter, then the account will be getting marked as NPA. So for example, the interest which is debited in the account during the period or during the quarter of say October to December, if it is not received within next 90 days, that is by March end, then only the account will get marked as NPA. So indirectly, there is a leverage given for October and November interest repayments. So October month interest, gets a period of 5 months to repay. The November period, November month interest gets a repayment period of say 4 months. So that's a leverage which was given. This concession has got removed with effect from 31st March 2022 onwards. And the concession has got removed through this circular of 12th November 2021. So this is one change which has got effected through this November 21 circular. So just keep this thing in mind. Now there are a few exceptions to this rule of NPA classification norms. Suppose you are having a term loan wherein there is a moratorium granted for payment of interest as well as principal portion. So what will happen is, during this moratorium period, interest will keep on getting debited in the account, but the interest is not due because there is a moratorium period granted for payment of interest. So in such cases, there is no amount due in that account for that period. And since there is no amount due, there is no question of any amount being overdue in that particular account, and the account will remain into standard asset category. Another exception is that in case of staff loan accounts, the repayment structure is entirely different. So typically in most of the banks, they have a structure wherein in case of staff loan, firstly, the principal is repaid, followed by interest repayments. So for 90 days delinquencies norm, you have to go by the repayment schedule which is prescribed for that staff loan, and based on that, you need to mark that account as PA or NPA. Then for bill purchase account, if the bill remains overdue for a discounted period of more than 90 days, then the account will be marked as NPA. As far as agriculture advances are concerned, if interest or installment related to that agriculture advance, if it remains overdue for a period of 2 crop seasons, for short duration crops, and for 1 crop season for long duration crop, then the account will get marked as NPA. The definition of long duration crop is that this is the crop wherein the crop season is more than 12 months. So that's how it will get distinguished between 2 types of NPA criteria. Then RBI has given a discretion to the bank to reschedule the agriculture advances wherever the agricultural advances, that is wherever the borrower has got affected by natural calamities. So in such cases where the natural calamities are impairing the repayment capacities of those borrowers, then there is a discretion given to the bank to reschedule the loans subject to certain conditions. And when such loans are rescheduled, the class of asset will still be retained. So there will not be any downgrading which will happen. Now, whenever you are looking at such reschedulement, you need to first confirm that the loan which has undergone reschedulement using these relief measures criteria, whether it is fulfilling the farm credit or not. So that is the first thing which you need to verify. Secondly, you need to verify that the borrower where he resides or where he is having agricultural activities conducted, whether that particular area is declared to be affected by natural calamity or not, then only he is eligible. Now, whenever such natural calamities happen, the happening of natural calamity has to be declared by the sovereign. That is, either a central or state government will declare that a particular area is affected by natural calamity. And in such cases, the relief measures are given in 2 types. That is, for short-term agriculture loan, the relief measures are different. For long-term, it is different. So in next couple of slides, we'll just have a look at that. As far as short-term agriculture loans are concerned, there is one condition that in case of short-term agriculture loans, the loan should not be overdue at the time of occurrence of natural calamity. So if the loan is overdue the relief measure benefits are not available. What it means? It means that if there is a restructuring which happens with respect to such loans which are overdue at the time of occurrence of natural calamity, then after reschedulement, the account is bound to be downgraded to substandard asset category. So retention of class benefit is not available. Secondly, if the crop loss is below 33%, these benefits are not available. So if the crop loss is between 33 and 50%, the maximum extension which can be given for repayment period is to the extent of 2 years. And if the crop loss is beyond 50%, you can have an extension given for 5 years. And these 2 and 5 years will be inclusive of mandatory moratorium period of at least 1 year. So that's a mandate which RBI has stipulated in the circular. Then for long-term agriculture loans, there is no such eligibility condition is there about account should be within limit. No such conditions are there. But there the relief measures are divided into 2 types. First type is that in case of long-term agriculture loans, when the crop for that year is damaged due to natural calamity, then in that case, presuming that productive asset is not damaged, then the reschedulement of installment is permitted with respect to the installments which are due during the year of natural calamity. So 1 year extension is given. Only one thing which we need to keep in mind, that willful defaulted installments are not eligible for reschedulements. And payment of interest can also be postponed. So it's not only principal, but also interest which can be postponed. Now, if you have a scenario wherein productive asset is damaged, either partially or fully, then in that case, repayment period can be extended to the extent of 5 years. So if any of these conditions are tweaked, for example, for productive asset damage cases, if the repayment period is extended beyond 5 years, then what will happen? The outfall of that is you cannot retain the class of asset and you have to downgrade the asset from a standard asset category to substandard asset category. Then in case of crop loans, one more thing which is very important is that repeated restructuring are very much permitted, which are usually not permitted by RBI. So it might happen that a particular borrower is affected by natural calamity on year basis. Every year there is a drought. So in that case, repeated restructurings will be done. But one thing which is very vital, which you need to keep in mind as an auditor, is that wherever the crop insurance proceeds are received or wherever the productive asset gets damaged and an insurance cover is opted for that, so you receive a insurance proceeds against that. So those are required to be adjusted against the restructured loans first, and it is not supposed to be adjusted against the new loans which are granted or the present repayments which are due. Then for derivative transactions, same 90 days delinquency norms are there, that if the overdue receivable position is not squared off within 90 days, the account will get into a NPA category. As far as liquidity facilities are concerned, same 90 days delinquency norms are there. As far as credit card dues are concerned, then the norms are slightly changed. If the minimum amount payable, which is specified in the credit card statement, if it is not paid within 90 days from the next statement date, then the account will be marked as NPA. That is, the credit card account card holder will be considered as non-performing asset. There is one leverage which has been extended through IRAC norms to the credit card holders, that in case if the credit card holder pays the credit card dues beyond 3 days, that is up to 3 days from the original due date, then such defaults are not supposed to be reported to credit information companies. And also the bank should not levy any penal charges. But this will apply only in instances wherein the payment is done within 3 days from the original due date. And for the calculation of 90 days, this 3 days grace period is not required to be considered, and 90 days will be calculated from the next statement date. Then as far as cash credit accounts are concerned, there are 3 criteria which are given to classify that account as out of order. And naturally, once you fulfill any of the condition, the account will be getting marked as NPA. First condition is that if the account is continuously overdrawn for a period of more than 90 days, then the account will get marked as NPA. Second condition is that even if the account is not overdrawn, but if there are no credits for a continuous period of 90 days as on the balance sheet date, then the account will get marked as NPA. Third condition is that as on the balance sheet date, if the credits in the account are not sufficient to cover the interest which is debited during the last quarter, then the account will get marked as NPA. Let me just elaborate this third condition. Let's presume we are talking about 31st March 2022. So you need to consider the last quarter. So in the last quarter, you need to take a period of 1st January till 31st March. Now, if the interest which have got debited in the account in that period, that is January, February, and March interest, the summation of that you need to compare with the credits which are there in the account from 1st January till 31st March. If the credit summation is more than interest, the account is standard. If the credit summation is less than the interest, the account will become NPA. These two conditions have got changed with effect from 12th November 2021. Now, what has got changed? Earlier, these two conditions were supposed to be tested only at the balance sheet date, that is at quarter end. Now, what RBI stipulated is this 90 days norm should be tested by you, that is by the bankers, at the end of every day. So, suppose today we are on say 22nd of March, and we are running or we are testing a CCD account for the second and third condition. So 22nd March is my 90 days. So I have to go backwards. So typically the block will be from 23rd December till 22nd March. So during this block, the interest is debited for the period for the months of December, January, and February. You have to compare that with credit summations. And if the credit summations are less than interest debited, you have to immediately mark that account as NPA at the end of the day. Then what is overdue is also defined by RBI. So what is overdue? See, if an amount which is due to the bank under any credit facility, if it is not paid by the borrower on the due date which is fixed by the bank, then that account will be called as overdue. Let me give you an example. Suppose today is 22nd March and the monthly installments are due at every 22nd day of every month. So if a borrower doesn't pay installment on 22nd March, at the end of the day on 22nd March itself, the account will be considered as overdue. So when you are calculating the period of 90 days overdue, 22nd March will be the first day. So it is not from 23rd March. It is immediately on that date itself, wherein the account will be considered as overdue. Now let's look at a couple of paras which have got introduced in October 21 circular, which are of vital importance. First is para 4.2.2, which talks about the requirement for the banks to ensure that they have an appropriate internal system for proper and timely identification of NPAs. Now, the inference is drawn from 14 September 2020 circular, which talks about automation of IRAC norms and provisioning process. And wherein the cutoff date which was prescribed for the banks to achieve automation was 30th June 2021. Now, what does it mean? Firstly, it means that if as an auditor, if you have found out any divergences wherein you have identified NPAs, which were not identified by the system, it means that there is a regulatory violation which is done by the bank, wherein automation has failed. So make it a point to highlight such cases in your audit report also and in your LFR also. So that is the first thing. Secondly, even though RBI is harping upon automation of IRAC norms by this circular, and there are a lot of, you can say, deliberation which are done about the importance of automation. But let me just draw your attention to one simple thing, or rather two things. Firstly, similar circular was issued by RBI in September 2009, that is more than 10 years back. Even at that point of time also, all the banks confirmed that everything is automated. Our CBS is foolproof. We are able to identify the account on a regular basis. So there is no manual intervention which is done. And in last 10 years, all of us, who have been doing bank audits, all of us are well aware that what kind of automation the banks had implemented. So in spite of a circular which was issued 10 years back, RBI has been compelled to issue another circular. I think that speaks a lot about the automation status in the banks. Let me talk the second point, which is of vital importance from automation point of view. So as far as automation is concerned, first thing which is required is that there has to be a sufficient master data available in the system on the basis of which IRAC norms can be automated. I will give a simple example wherein it's a likely circumstances wherein this automation is not going to work. Let's talk about agriculture advances. For agriculture advances, what is required is for every borrower account, the data of which crop that particular borrower is taking for that year has to be updated on year-on-year basis. Secondly, the crop seasons which are defined by SLBC of that state, that is state level banking committee of that state, has to be updated in the system. And unless and until this data is available for each and every agriculture advance, practically the automation of IRAC norms are not going to work for agriculture advances. Another thing is that in many CBS softwares, the out of order status 3 conditions are not really inbuilt in the system, typically the second and third condition. So pay attention to what kind of automation has occurred. And maybe you can ask a simple question to the bank that has your IRAC system which was inbuilt in the CBS system has undergone a change subsequent to November 21 circular or not? If the answer is no, it means that the CBS system is not really automated in terms of Rba circular, because few things have changed by way of 12 November circular. Then para 4.2.19.3 talks about that 3 days grace period, which is granted for repayment of dues of credit card. Then para 5.6.2.3, which is important from central auditor's point of view, about utilization of floating provision, which is permitted as a one-time exercise, which can be used for normal BDR provisions up to 31st March 2022. Then para 6.2.2, again typically useful at the central level, wherein technical write-offs are permitted only when bank is extinguishing all the available measures of recovery before the account is considered for write-off either fully or partially. Para 7 is vital, wherein NPA management RBI is expecting the banks to ensure that there is a inbuilt effective mechanism in the CBS system and availability of granular data is required to be ensured by the bank. Then para 21.6 talks about FITL. Now, in case of FITL, what RBI is stipulating is that for FITL, which is represented by unrealized income component, there has to be 100% corresponding provision which has to be made against that. And subsequently, RBI has given a clarity in November and February circular about how it distinguishes from moratorium period for interest. So let me give you one example of FITL, and let me elaborate that how it is different from interest during moratorium period. See, FITL is a typical scenario wherein the interest is got debited in the account, but since borrower is not able to pay that, or because the bank wants to extend some, you can say, extension period for repayment of interest, there is a new facility carved out of that, which is in the form of funded interest term loan. So there is a separate repayment schedule which is defined for FITL, and based on that, the facility is given. So the interest per se is not received by the bank; it is still unrealized. So it's merely by way of accounting entry. It looks like that the interest is serviced. So in reality, that is not the case. So that's where the 100% provisioning is mandatory. As compared to that, interest during moratorium period is different. So let's presume that we are having a scenario wherein there is an interest moratorium period of say 12 months, which is granted to a borrower account. What it means is, for first 12 months, the interest will get debited in the account, but it will be considered as due only after completion of 12 months period. So in such cases, interest can still be recognized as income. The reason being, such interest during moratorium period is treated at par with your principal portion. So it is not a FITL and no provision is required. Then para 30 prohibits the banks to loan to extend the loans for financing of promoters' contribution, with only one exception. The banks have been permitted to extend the finance only to the specialized entities which are formed for taking over and turning around of troubled entities. That is, the entities which require a turnaround, like say for example Air India case. So suppose Tata Group has formed a specialized entity to take over Air India, which is a troubled entity. Only in such cases, banks can fund for promoters' contribution. Otherwise, promoters' contribution funding is prohibited for the banks. Then let's come to the IRAC circular dated 12th November as to what is really specified in that 12th November circular, which according to me, my personal view is that it's high beyond a particular point because it's only clarificatory in nature. So this is something which might be of vital importance from bankers' point of view. My personal view is that almost all the things were supposed to be followed by the banks. All the auditors were aware about that. And if you look at even the bank audit guidance note in last maybe say 10 years also, everything which is specified in the circular is already there in that. Nevertheless, we'll talk about what has been specified now in the circular. First thing what RBI specified is, RBI specified that the due date for repayment has to be mentioned in the sanction letter. That has to be conveyed to the borrower. So what it means? Suppose there is a bank which is saying that say 10,000 rupees per month should be paid by the borrower, but it is not specifying the exact date of every month wherein the borrower is supposed to pay. Then that's where RBI is saying that the bank should specify the due date. So that is para 1. Para 2 talks about classification of SMA and NPA has to be done as a part of end of the day process. That is, whenever you are classifying an account either as a NPA or special mention account, then the flagging, that is tagging of account, has to be done at every EOD. Now, this was something which was expected even in earlier circulars. RBI has already specified that monitoring of accounts and classification of NPAs has to be a continuous process. Now, what is really mean by continuous process is nothing but end of the day process. But anyway, RBI has highlighted that again. Part C, that is paragraph C, talks about definition of out of order status, wherein the changes have occurred. So earlier, the second and third criteria were required to be tested only at the quarter end. So instead of that, it's a moving 90 days concept. So at the end of the day, when you are testing second and third condition, 98 days today, yesterday will be 89 days. So like that, backward you have to go for 90 days and you have to test that criteria. So this is one change which has got effected. Then para D is the second change which has got effected, that the concession available in para 2.1.3 has got removed with effect from 31st March 2022. But it means that the concession is very much there up to 30th March 2022. Then para E talks about upgradation of accounts which are classified as NPA. Now again, this portion is something as a clarity which is given to the bankers, not really to the auditors, because we were already following that norm. As all of us were already aware about that whenever an NPA account is required to be upgraded, one has to ensure that entire arrears of interest and principal has to be paid by the borrower. So it means that unless and until a customer is having a zero overdue status as on end of the day, the account cannot be upgraded. So in short, partial recoveries, subsequent recoveries should not be factored in, and the account has to be upgraded only when the entire delinquencies are met at custody level. Then para F talks about income recognition policy for loans with moratorium for repayment of for payment of interest. This we already talked about that wherever such moratorium is given, then in those cases you don't have to really provide for that as FIDL, because this is not a FIDL facility. Then let's talk about 15 February 2022 circular. This circular is having just 3 paras, again a kind of a reiteration. Para A talks about out of order status to be applicable for all types of overdrafts, including those which are not meant for business. Now that was a natural presumption, I should say, which was applicable to CCOD, but RBI has specified that. We have para B, which talks about concept of previous days. So that previous days will 90 days will include 98 days as of today's date. So that is a clarity which is given. Para C is again a reiteration of what we read in 12th November circular, that loan can be upgraded only when entire arrears pertaining to all credit facilities of that borrower are repaid. So in short, at custody level, there has to be zero overdue status. Now let me talk a little about this para A. I presume that it is hinting at certain bank product, bank loan products which banks have been launching since last couple of years. I will name a product without mentioning the bank. That there is a bank actually which is offering a housing loan product, which is in the form of drop line OD. So even though it is usually presumed that housing loan is always in the form of term loan, in this bank the product is different. It's a drop line OD. So at every monthly intervals, the limit gets reduced. So suppose you are having a loan of say 180 months. So from first month, gradually 1/80th portion of that limit will get reduced, and the borrower needs to ensure that you are not exceeding that drop line OD limits. Now what happens is, in such scenarios, you need to apply CCOD related out of order status norms to such accounts and not the term loan accounts norms. And what has really transpired is, in that bank, what we observed was that as far as the product code was concerned, the product code was tagged to CCOD product, because naturally otherwise a checkbook cannot be issued. But for NPA marking, the code which was tagged was for term loan. So such mismatches should be avoided. So as an auditor, be vigilant about every product which is available in that bank. Then a few things which RBI has clarified, that accounts with temporary deficiencies, how to deal with that. First deficiency, that if the stock statements are not submitted, so in that case RBI has given a leverage for large borrower accounts, wherein a stock statement which is submitted, the DP which is calculated based on that can be used for next 3 months, and after that the DP cannot be used. So what it means is, suppose you are having a stock statement, having a borrower wherein stock statements are not submitted for last 6 months, the account will turn into NPA. On the similar line, if the account is not renewed regularly within 180 days from the original due date, then the account will fall into NPA category. Now here you need to be little critical, that wherever ad hoc limits or TODs are sanctioned, there also 180 days norms are applicable. Another thing is that for short reviews and technical reviews, you shouldn't be factoring those due dates. The due date counting or the counting of overdue status from that due date will start from original due date and not from the end of technical review or short review sanctions which the bank is giving. Then few exceptions which RBI has provided for advances against term deposits, NSCs, IVPs, KVPs, and life insurance policies. So in such cases, till the time your ledger balance is less than security cover, the account will be remaining into PA category. If it crosses that, normal norms will apply. As far as central government guaranteed accounts are concerned, the accounts will not be marked as NPA till the time central government guarantee is live. And in such cases, then the income will be recognized on cash basis. For state government guaranteed accounts, no such exemption is available. Similarly, for advances against gold ornaments, government securities, no such exemption is there. They will be marked as NPA as a normal scenario. For gold loans, there is one more criteria which you need to keep in mind. So suppose your loan to value ratio with respect to gold ornaments, if it deteriorates beyond 75%, so in such cases, you have to immediately mark that account as NPA without waiting for 90 days delinquencies norms. Then as far as classification is concerned, classification has to be co-borrower, that is borrower-wise classification norms should be followed. So if any facility of a borrower is marked as NPA, whichever facilities that borrower is enjoying in that custody, his custody, that will automatically get marked as NPA. Then couple of exceptions to this rule for LCBD facilities which are sanctioned against the LC issued by other banks, then in such cases that LCBD can remain into standard asset category. Then credit facilities which are extended to PACs and FSS for onward lending arrangements, those are concerned. Then whenever such onward lending is done, you need to verify the underlying accounts in this onward lending arrangement. And out of those accounts, if few accounts are marked as NPA, only that portion of exposure should be carved out of this PACs and FSS exposure, and the balance will remain into standard asset category. For consortium advances, every bank has to classify the account based on their own record of recovery. So it might happen that suppose there are 5 consortium member banks are there. Out of that, maybe 3 have marked that account as NPA, 2 have not yet marked that account as NPA. That is quite possible because in these 2 banks, it might happen that 90 days delinquency norm is yet to be made. So it is member wise and not consortium wise marking of NPA which will happen. 2 straightaway classification norms which RBI has specified, which we discussed. If there is a erosion in value beyond 50% of the last value assessed, then in that case, account will straightaway go to doubtful asset category. Another one is that if in case of secured loan, if the security value is less than 10% of outstanding balance, the account has to be taken to straightaway to loss asset category. As far as fraud accounts are concerned, wherever the fraud is reported to RBI within the time frame which is prescribed, then you can provide that portion of 100% provision in a staggered manner in next 4 quarters. But if it is not reported to RBI within the time frame, immediately the bank is required to make 100% provisions against such fraud accounts. Then as far as inherent weakness accounts are concerned, you have to be little critical. Let me give you a couple of examples of that. For example, if you observe an account wherein the conduct of account is not satisfactory, there are hardly any transactions which are there, or income generation activities in that particular account has now stalled. So for example, if you have a term loan and say a CCOD facility which is given to a manufacturing unit, and the manufacturing unit is not functioning, so naturally there is an inherent weakness that that particular borrower, even if he hasn't met 90 days delinquencies norm as on today, it's likely that the account is going to be marked as NPA. So in such cases, you don't have to wait for 90 days norms. You can mark that account as NPA, on an instant basis. Secondly, if you are a little doubtful as to whether the inherent weakness exists or not, so in such cases, the bank has to evidence before you as to how the account is getting regularized. So bank has to, give you a representation to prove before you that there are no inherent weaknesses in that account. So it is a responsibility of the bank and not the auditor. Now let's talk about a typical case or typical cases which you observed wherein the account is not really having a good conduct of account throughout the year, but at the end of the year suddenly everything gets regularized. It's a very common scenario. Now in such cases, you need to be very critical about finding out what is the source of these credit entries which are appearing in the account. So let me give you a couple of examples wherein you can accept such genuinity of credit entries. For example, if you are having an account of say government contractor, wherein usually the amounts are issued only at the year end. Or let's say talk about account wherein there is a seasonality of business, wherein maybe the output is typically sold in the month of say February or March. So in such cases, sudden credit entries are bound to be there, or maybe a case wherein old long outstanding book dates are realized now. So that's a normal case. So you can always say that it's normal business activity, and the account has got regularized out of regular activities only. But what is not so regular activity? Let me define that. Let's take a case of a company wherein directors are introducing personal funds in the form of unsecured loan or equity share capital introduction. Maybe partnership firm partners are introducing capital and bringing that account to the normal. These are the instances wherein you cannot say that regulation has happened out of business income or business activities of that entity. So in such cases, you have to test that account as to whether the inherent weakness exists in that account or not. And based on that, you need to take a call whether the account should be called as NPA or whether it should be considered as a PA account. As far as mandatory valuation rules are concerned, these are applicable only for accounts which are marked as NPA and which are having exposures above 5 crores. So in such cases, the mandate is that for immovable properties, the valuation has to be carried out once in 3 years. And for accounts wherein the stock and book dates is offered as security, then the annual stock audit is mandated. So if any of the conditions are not met, accordingly, you need to take a call to consider the realizable value of underlying securities as zero. But mind you that this applicability of mandatory valuation norms are applicable only for NPAs above 5 crores. So NPAs below 5 crores or PAs irrespective of value, these norms are not mandatory. It will depend upon the internal policy of the bank. And based on that, you need to take a judgmental call as to whether the security value which is disclosed by the bank, whether it is having a diligent calculation of that security value or not. So let me just quickly cover a couple of points before I conclude the session so that we can have some question and answer session. So let me just quickly touch upon a couple of points. So let me touch upon 5th May 2021 circular about MSME relief. 2-3 vital things which you need to keep in mind. First thing is that any borrower who is MSME borrower and he has availed benefit under any of the earlier schemes up to this 6th August 2020. In such cases, he will not be eligible to get benefit under 5th May circular. That is the first condition. Second condition is that the eligibility criteria is defined. The second eligibility criteria is that the account should be a MSME borrower account and the exposure should be 25 crores, including fund-based and non-fund-based facilities. This 25 crore limit has got extended to 50 crores by way of June 2021 circular. So keep that thing in mind. Then two major cutoff dates which you need to keep in mind. That such account should be marked as standard account as on 31st March 2021. Then only account is eligible. Secondly, this scheme was extended only to the extent of 30th September. So the scheme should get invoked by that time. After 30th September, this benefit is not available. Benefit of this scheme is that if any account gets downgraded during the invocation date and implementation date, then the account can again get upgraded to standard asset category. So this is 5th May 2021 scheme, which is in continuation of 6th August 2020 scheme. Then let me take you to the next important thing about COVID-19 circular. As all of you are aware, 6th August 2020 was the circular, which was Resolution Framework 1.0. The benefits were extended to COVID-19 pandemic affected businesses. It was not supposed to be utilized for those who are not got affected by COVID-19 stress. On a similar ground, there is an extension which is given to that framework. The extension is given to the framework which is called as Resolution Framework 2.0. So everything which is specified in August 20 remains same. What has got changed? Let me just have a look at that as to what has really got changed. First thing is that those accounts who have availed benefit under 1.0 framework, they are now not eligible to avail benefit under this Resolution Framework 2.0, except one thing. What is that exception? That exception is that if in earlier framework, if he has got moratorium less than 2 years, so whatever is balance remaining moratorium period, he can avail in 2.0 framework. But beyond that, there is no benefit which is available. So let me quickly tell you as to for accounts what kind of benefits are available. As far as eligibility criteria is concerned for MSME, as we already discussed, the aggregate exposure should not be beyond 25 crores. So that is already specified. Then as far as other businesses are, what kind of relief is available? First is you can have a reschedulement of payment. Second is conversion of interest is possible into a new credit facility. Working capital sanction can be revised. Moratorium can be granted to the extent of 2 years. Resolution plan is required to be finalized and implemented within 90 days from the date of invocation. So important thing is that the invocation date is the date which you need to keep in mind, wherein the borrower and the banker have agreed to invoke the plan. And that date has to be prior to 30th September. And after the date of invocation, within 90 days, the plan should get implemented. One more important point is that as far as the borrower is concerned, he has to make an application to the bank for invocation of the plan. And within 30 days, the bank has to respond him back as to either favorable or unfavorably. And if the account is downgraded between invocation date and implementation date to NPA category, after implementation, it will get upgraded to performing asset category. So this was briefly about 2.0. A few other circulars which I've just mentioned for your reference purpose. Let me just quickly cover project loan and then I will conclude the session. As far as project loans are concerned, these are the loans which are sanctioned in the form of term loan to set up an economic venture. And in that case, whenever a project loan is sanctioned, DCCO is required to be predefined. Now, because of the nature of project loan, there is a possibility that some kind of flexibility might be always required for project loan. So RBI stipulated certain conditions, and if these conditions are met, practically restructuring is permitted to a limited extent with retention of class benefit. In the sense, the borrower account can retain the standard asset class if those conditions are met. So there are 3-4 criteria or flexibilities which RBI has given. First one is that in case of a project loan, if the original outlay is revised and now the new outlay excluding cost overrun is going beyond 25% of original outlay, either in terms of cost or in terms of the outlay. In the sense, for example, if you are say having a loan which is given for hotel originally is having say 100 room capacity, now it is decided to increase that to 130 rooms, so it is going beyond 25%. So in such cases, if it happens before commencement of commercial operation, the banks are permitted to give additional lending and the entire repayment period can be restructured. New DCCO can be also set. So that is one flexibility which is given. Second flexibility is given to extend the date of DCCO. So for infrastructure loan, you can extend the period to the extent of 2 years, and for non-infra, you can extend the DCCO for 1 year. If you have a court case, additional 2 years are given for infrastructure. And for any other reason which is beyond the control of borrower is there, then in that case additional 1 year is there. So 2 + 1, 3 years are available. For non-infrastructure sector, irrespective of the reason, additional 1 year is available. So 1 + 1, 2 years are available. On a similar ground, there is additional 2 years period which is available, wherein there is a change of ownership. So if it is observed that a project is stalled because of inadequacies of promoters, then there can be a change of promoters which is possible, wherein the new promoters will acquire at least 51% stake in that company. And in that case, additional 2 years extension of DCCO is permitted without downgrading the asset, subject to certain basic conditions. Like, you have to establish the economic viability of that. Takeover has to be completed within 90 days. Like that, basic criteria are defined. And the last flexibility which is given for project loan is for financing of cost overruns. What the bank can do is that bank can have a standby credit facility which can be sanctioned, so that wherever the cost overrun occurs, that standby credit facility can be used by the borrower. Another possibility is that the bank can sanction the standby credit facility instantly. In both the cases, it will not be considered as a restructuring and the account can retain the class of asset. Only condition is that bank can give cost overrun funding only to the extent of 10% of original cost. If the project cost overrun is going beyond that, the account will get downgraded. Income recognition, I think I don't have to really touch upon that because everything has remained same. Provisioning norms are also same. Let me just talk a little about maybe 2-3 minutes. Wherever there is a restructuring which happens in case of any account, then in that case, you need to ensure that the account gets downgraded. So wherever restructuring happens, unless it is permitted by RBI under special exemptions to retain the class of asset, like date of DCCO which is extended, or agriculture loan wherein relief measures are there, or COVID-19 relief measure circulars are there, wherein restructuring is permitted and retention of class benefit is available. In all other cases, you have to downgrade the asset immediately whenever the restructuring happens. Restructuring can happen in various forms. Few examples, I will just spell it out. There can be an extension period for repayment which can be granted. Repayment can be given in ballooning form, or there might be a favorable rate of interest which is given to that borrower because he is having the difficulties to cope up with business stress. So any of these things happen, then in that case, the account will be called as restructured and immediately you have to downgrade the asset. The moment you downgrade the asset, then you need to test that account as to whether the account is able to perform satisfactorily in the given circumstances. So if the satisfactory performance criteria which are defined by RBI, if they are fulfilled, the account can get upgraded in the next year. So for MSME borrowers which are having exposure up to 25 crores where the account is downgraded because of restructuring, the satisfactory performance is the one wherein from 1 year of first installment paid by the borrower in that repayment tenure, if the account is able to achieve a satisfactory performance wherein there is no overdue instance beyond 30 days in that 1 year period, the account will stand upgraded. For all other instances of typical resolution plan, one has to ensure or one has to factor in the period wherein at least 10% of principal amount is paid. So during that period, there should not be any overdue instance for that entire period. So even if 1 rupee or 1 day overdue is there, then the plan will be presumed to be failed and the account cannot be upgraded. So these are the criteria for satisfactory performance. So this is more or less, I wanted to talk about IRAC norms. I was not able to cover the entire thing because it is practically difficult to get into nitty-gritties of every IRAC norms. But what I will do is I will share the presentation with Vivek ji, who can distribute that presentation material, which is more in the form of checklist also in certain cases. So maybe we can take a couple of questions if the time permit, and I can answer to the questions of the audience. So thanks to all of you for this opportunity to be which you have given to.
Thank you, Dhananjay ji. I think your session was crystal clear, lucid, and people really benefited from this. Friends, there was no question in the chat box. So without, we know President of ICAI, Devashish sir has joined us, and we will not like to make him waiting over here as we are just on the right time of the changeover of the speaker. Yeah. So I would request Devashish sir, President of ICAI, to kindly ICAI has been very instrumental in making this possible, that the RBI was trying to have the 70% limit for the bank audit, 70% of advances, but now we have made it 80% thanks to President ICAI. And over to Devashish Da without further ado. Devashish Da.
Thank you very much, President ACAE, Vivek Agarwal. To Mr. Gokhale, thank you very much for having shared your thoughts with us. And to everybody else who are listening to me, I am speaking from Delhi. I have just had a very tough press conference, and I'm just moving out of the press conference from Hotel Le Meridien and going to the Institute's office at ITO. Now, since the President has spoken, Vivek has spoken about the 80% that you are talking about, please note, we are very concerned of the even for the impact that 80% will have on the number of audits. Yesterday, I called a meeting of all the central statutory auditors at 11:30 in the morning. And our instructions were, or our request, no, it's not instruction, our requests were that ASA 530, that is an auditing standard, says that, you see, when you select samples, you must ensure that, you see, you select the samples randomly and from a wide spectrum. So it is, you see, we requested that when the branches to be audited are selected, then all the branches gets a due chance of being selected, and the branches under audit should not be only a few branches which are, you see, located in the located in the metropolitan areas, and branches in the mofussil areas are completely let off the audit net. So that should not happen. So you see, we hope, and we are also saying that you see, if required, if the auditors feel that more than 80% should be covered to enable them to give a true and fair view with full satisfaction and confidence, then we said that you also suggest to the bank management that they should select branches which are going beyond the limit of 80% as laid down by RBI. So you see, audit this time, bank audit, those of us who are going to do, let me just bring to your notice that 3 publications are very important. One is the guidance note on bank audit, which the institute has prepared. Please always make that your Bible. Number 2 is the guidance that we have given on long form audit report. You are aware that the long form audit report had changed from last year. I'm sure some of the speakers must have spoken about that. So it is very important that the long form audit report is, that the guidance is duly followed. I was speaking at Bhubaneswar day before yesterday. There was a big program on Sunday, and I was just saying that long form audit report, if you are going to feel right by writing, yes, no, not applicable, then it is going to be a disaster for us. It is going to be utter disaster for us. So please ensure that you see the guidance on long form audit report and accordingly fill the long form audit report. Many of us, if you have an observation, we put the observation in the long form audit report instead of putting that observation in the main audit report. You see, the long form audit report is very clear that if you want to qualify your audit report, then the qualification should go in the main audit report instead of finding a place in the long form audit report only. So have a look at that. Ensure that the long form audit report that you feel is based on the technical guide provided by the institute. And the aspect that needs to be looked into is the IFC reporting, the internal financial control reporting. So you should, have a look. Again, the institute has got have a look at the contents of the technical guide. It will certainly help you in doing the audit in a most satisfactory manner. The last point, do not hesitate from issuing a MOC. Nobody is going to take away your audit because you have issued a memorandum of change. Please note, at the end of the day, the profession will be judged by the number of MOCs that we could issue. So if you feel that, by issuing an MOC, your audit, you may not be reappointed as the auditor. That will be a wrong viewpoint. I would like to encourage you that wherever you find that MOCs are needed to be issued, please do not hesitate to issue the MOC. Sometimes we also talk about the paucity of time for carrying out the audit. If you have to take 3 or 4 more days, please do so, but do not compromise on the quality. When we talked to RBI, and I spoke to the Deputy Governor of RBI on the 4th of March, and as Vivek was telling us, that it was basically because of the 70% or whatever. I said that I will do everything needful in my power as the president of the institute to tell the auditors to only follow quality practices. So it is very, very important that if you have to retain the bank audit for the future, we must be extremely quality conscious and our report should be top class. With these words, I wish all of you the very best, and needless to mention, I am very happy with ACAE for having organized this program. ACAE, I think, is doing very well, a top class organization, and I hope ACAE the very best in all its future endeavors. Thank you very much.
Thank you. Thanks a lot, CA Dr. Devashish Mitra, President ICI. We are listening from the horse's mouth how ICI has been fighting in and out. And friends, let me add on that the technical guide, which seems to be very thick for us to study, has lots and lots of hard work to be prepared. And it is really a Bible. If you go through it, we cannot go wrong in any of our assignment, whether it's a guidance note or whether it's a technical guide for bank audit or other professional work. So we like to thank Debashish from the bottom of our heart at ACA for giving his time from a busy schedule. He has been running very hard today. He had a press conference on behalf of ICA, but still I thought whether he'll be able to make it or not. And his love for ACA and for Calcutta and East India and for Pan India for that matter, and for the branch auditors, that we don't go wrong. He was here to speak. Thanks a lot, Debashish, once again, for bottom of our heart. And we would look forward to have you more after you are able to serve the chartered accountant community. And we would appeal everyone to please go to all the guidance notes and spread the word that we will do audit whatever may come. And we are able to say that by 80% of the audit, we have identified so much of fraud. So next time, the deduction of the percentage doesn't happen. Thanks a lot, President ICICA, Dr. Debashish Mitra. Thanks a lot, sir.
Thank you. Thank you. Thank you very much. All the best.
Thank you, sir. So, friends, any quick question for Dhananjay ji? Then our next speaker, Narayan R. Kothari ji, is there for discussion LFAR. Srinivas Joshi ji was unable to make it because of the last-minute audit committee meeting. So, any question for Dhananjay ji on NPA? Because NPA becomes a major aspect of our MOC also. So, anyone having any question? Yeah, Priyank, you have some question, I suppose. No, I think, sir, your deliberation was perfect, and we would look forward to have you more in a physical session. I understand that you are traveling north, south, east, west, from Coimbatore to Bombay, everywhere, and you have been in high demand. So thanks a lot for your time, sir, at ACA. And Priyank, please give a formal vote of thanks to Dhananjay ji.
Yes. Thank you so much, Dhananjay, sir. I mean, it was a pleasure listening to you. So bank audit is a huge subject, and to cover, such important aspects in say 45 minutes or an hour, it takes hours and hours of practice, and I'm sure, years of hard work for you to cut down on the most important aspects and put just those forward. We also had a couple of good points in the chat as well, that it was very relevant content which was deliberated in a really short span of time. So when the audience likes the deliberation, there is nothing much to say. Thank you so much, Dhananjay sir. We hope to hear you soon physically, because I think everyone is tired of the virtual mode now. So thank you so much, sir. It was a pleasure listening to you. Thank you so much. This is an
Thanks, sir.
memento, sir, from on behalf of our association for you.
Yeah. Thanks a lot.
I hope this takes a place in your cabinet very soon.
Yeah. Thank you.
Thank you so much. Thank you.
Thank you, Dhananjay ji, and thanks once again. And looking forward for more deliberation from you at ACA. And we know that 45 minutes of NPA is really, we have done injustice to the time, but we'll make sure we'll have a proper group discussion on NPA whenever possible at ACA. Because bank is the backbone of the economy, and if bank fails, economy fails, and if bank fails because of a chartered accountant, it is the failure of the full community, I suppose. Thanks a lot, Dhananjay ji. Now, I would request Priyank to kindly introduce our next speaker, Mr. Narayan R. Kothari ji.
Yes, thank you, Bhaiya. So Nayan Bhaiya has a very impressive, profile. If I try and go through the entire thing, I'll probably, take up another half an hour. So I'll just read the relevant, points which I could make out. So CA Nayan R. Kothari ji is a postgraduate of commerce from MS University of Baroda and a fellow member of the Institute of Chartered Accountants of India. He also completed his post-qualification certificate courses of ICAI, which is Forensic Audit and Fraud Detection Certification courses on concurrent of banks. He is a practicing chartered accountant based at Baroda since 2006, partner of Manoj Vipin and Company. His areas of practice include internal and statutory audits of SMEs and corporate, consultancy in the areas of fraud investigation and forensic auditing, business restructuring, corporate financial planning. He also does consultancy in the areas of direct and indirect taxation and company law matters. He was the managing committee member of Baroda branch of WIRC of ICAI for 8 years and is presently the past chairman of the Baroda branch of ICAI. He was the chairman of the Baroda branch for the year 2014-15. He has also held various positions such as vice chairman, secretary, treasurer of the Baroda branch. He is the co-opted member of research committee of ICAI New Delhi for the year 21-22. He was also the co-opted member of banking, insurance and pension committee, editorial committee and various other committees of the ICAI in past. He also writes a weekly column on management in one of the leading Gujarati newspaper, Sandesh. I'm sorry, sir, I'm cutting short your introduction, but yeah, so over to you, sir, and we'll looking forward for a wonderful deliberation. Thank you.
Thank you. Good evening, friends. Previously, the session was to be taken up by one of the very senior faculty on the subject, CA Srinivas Joshi sir, but due to some sudden change into his schedule, he could not make it possible. So I am getting this opportunity to interact with you all people through this digital mode today evening. My dear friend and the previous speaker, Dhananjay ji, has already spoken very nicely on the NPA provisioning. Some of the last few points I had an opportunity to go through it. Sir, I just wanted to know at what time or total how much time do we have for the
Minimum
session?
1 hour. Minimum 1 hour. Maximum you can speak as long as you want.
No, okay. Because the revised LFR has got a lot of things to be, in particular discussed about. I just wanted to first know how much time do we have. Accordingly, we would be either touching upon the entire presentation or we would be only going through the relevant changes. Nonetheless, I'll first share the screen. Okay, is this screen visible to all of us, right?
Yes, sir. Yes, sir, it is visible.
Yes, just. See, LFAR, as I've told you earlier, or as our president sir also mentioned about the same, it's an additional or the detailed reporting requirement as far as the bank audit is concerned. When we go and when we try to do when we talk about the audit reporting in particular with respect to the bank, so in three parts the report goes: one about the certification, the statutory audit report, and your LFAR. If you talk about the statutory audit report, when we enter to the bank, generally the bank officers are ready to state that, sir, give me your letterhead, statutory audit report is ready. Right? So that much is their preparation as far as the statutory audit report is concerned. Of course, if we give the MOC or if there is any point concerning the opinion of the auditor, which is going to be the modified one, definitely we will have the mention over there in that report. But the entire working which we do, the various areas of the bank in addition to the advances which we are touching upon, and where we have got our observation, the best tool to report this, communicate this to every stakeholder, starting from the central statutory auditor to the various authority at RO, ZO, etc. The finest tool available for us is the LFAR, the long form audit report, right? In the limited time, the highest quality has to be delivered, because 3 or 4 days, which is the maximum time one shall be giving per branch. So here the largest quality to be delivered by the auditor. And whenever we listen to the authorities like our presidents, our RCM and CCMs, etc., whenever they share their experiences with communicating with the RBI and other authorities, they always make a concern about the quality about the reporting by our fellow members. Presidents are just mentioned, we are not supposed to write yes, no, not applicable, etc. But in a greater detail, as and where applicable, I am supposed to give the answers in the LFA. Before I come into the changes in particular about the LFAR, which had been there in place since September 5, 2020, which had been applicable since last audit, I'll say the major change which has happened, that online reporting. State Bank of India has started with the online reporting of the LFAR. Rest other banks have started supplying the Excel, which is more or less macros or certain controls enabled. Whenever I answer over there, or at most of the places, I am supposed to select the answer from the drop down menu. They're given standard answers to the same, positive, negative, both, whatever I want to select. So from the drop down menu in the Excel, I would be selecting the respective answer, and if there is an observation against a particular question, LFAR is into question answer format, right? So if there is an observation in respect of a particular question, the specific annexure into that Excel only is required to be filled in. Why I'm telling you all these things? Because the central auditor is going to make a consolidation of this through Excel by putting the certain controls or the commands which they have designed into. Meaning thereby, if paragraph or the annexure number 5.1 is going to have the list of the overdue account for the renew or review, then for the entire zone by consolidation, he will get the list of the accounts pending for renew or review. But if I do some modification there, ultimately what hard work I have done, what audit findings I have gotten, I want to communicate there, I would be failing in that. So one needs to be very, very clear to follow the format. Respective annexure needs to be filled in. Before 6-7 years from now, when we used to put up this LFAR into a Word format or in the Excel, what we were supposed to do, we were supposed to make one annexure of the entire advances things, and every query related to advances, may it be pending renewal, insurance, stock statement, DP working, whatever, would be part of only one annexure. And there I would be mentioning against every question refer to annexure number 2, for example. But here now, para number 5, section 5 in the advances side, in the asset side is advances. In that different paragraph would have the respective annexure, and I need to report it right there only to help and facilitate the consolidation by the central auditor. And why? Because whatever I have observed, my observation would be getting rightly conveyed over there. So that is the first point I would be very specifically, categorically, I would be asking you to focus upon. We need to do a proper plan. How and what the progress of the discussion, one way will be able to understand. I always tell that we just need to go read the LFAR, ask them, ye provide karo, wo provide karo. It won't serve the purpose. I need to go through the LFAR. I should know how many questions are related to the compliances, etc. There I just need to put up yes or no. How many questions are related to the test checks, where I am supposed to get the data, do the testing and respond, or otherwise I am doing the testing like checking of the advances file, so far and so on, and putting the query over there. So keeping in mind all these things, a proper planning needs to be done for the preparation of LFAR as well in my statutory bank branch audit. So it's an effective tool, as I already told. Question answer narrative format के अंदर ये पूरा चीज रहेगा. 1985 is the year of introduction of this. Slowly and gradually, probably at every decade or two, it had been revised at the various instances. The latest revision, as I told you, took place on September 5, 2020. And the major changes which has been brought in is more of the detailing. Plus, to accommodate many a thing which the CBS has brought in the changes. Like earlier, into the LFAR, we used to write down books of accounts, kaun se bana rahe, which books of accounts are maintained at the branch, these that. We used to write since CBS is not applicable and CBS is maintaining all the lists of the books of accounts, etc. Now, instead that, they have made certain modifications and acknowledged the role of the CBS, whatever software the bank might be using into this, right? And various other changes, which in the further discussion, we would be getting into. Branch is responsible for compiling the information which would be required by the auditor to comment upon in the LFAR. Auditor will ensure a proper documentation of this. I should know the question. I would be doing a little proper homework and asking for the details from them. Those every detail has to be well documented with me to safeguard myself if question arises in future regarding the work which I have put in. And the reporting has to be done with utmost accuracy and reporting at the respective column into the LFR. I am being very specific on that. RO, ZO, HO, and in particular, the central statutory auditors are the users of your LFR. Do's and don'ts, one can go through it a little later. Each answer should be responded. Big language, more or less now with the answers to be selected from drop-down menu, one shall not get the scope of writing much things. Specific instance of the weakness should be given. Main report and LFR are two separate reports. This is the additional reporting details, and that is the opinion on the balance sheet. So accordingly, one would be responding to this, will not have any cross-reference of each other. It should be well drafted. Keep complying and compiling with this during the audit, with the audit. It should not so happen that after conclusion of audit or after checking the advances files at the last day, last moment, I start and do compilation of the LFR. It should be done simultaneously. Anything in the LFR is not a substitute for the statutory audit report. They would tell you, sir, kindly put up in the LFR, but do not qualify the main report. No, sir. The problem is such which would require qualification in the main report. I will certainly qualify the main report, right? So these are the few little introductory part or the comments from my end with respect to the LFR. I already told you the question answer format would include mainly three types of the question. Few of them will be with respect to compliance, whether the branch had complied with the certain things or not, deficiencies in documentation, in processing, etc. And test, check and verification. How many advances were sanctioned during the year? How many I checked? Comment. Like that. From the revised LFR onwards, KYC also required to be test, checked and commented upon by the auditor. Friends, let me put up a very important note over here. A mark over here is audit of a bank is always understood as, looked at as the audit for the advances. I do agree to it. My most of the 70-80% of the time goes on the audit of advances. Absolutely true. No problem with that. But what do I sign? What do I certify and where do I make my opinion on balance sheet of the GL and PL, what they call it as a balance sheet and P&L account. So I am making comment on that. When I'm supposed to certify the entire balance sheet and P&L account of the bank, I must go through every aspect related to the balance sheet and P&L of the bank. That's the first thing I would like to little warn you about. And for that, if I do not want to do any extra effort, any special planning, simple thing, go through with proper compliance of the LFR, most of the area would be touched up. This one slide, I'll be sharing the presentation with you, so don't worry. Just follow the flow of the discussion which we had been doing. This slide includes one snap of all the changes which had been there into the revised LFR since last year. Now, I'll take you to the extent possible in the limited time all the questions of the LFR. Now, in that again, I have done one more additional thing. questions add mark with the respective color. Which questions or which changes or the question which has got the changes. Naya wala jitna bhi cheez hai, all the new requirement you would find in the further slide marked in any one of the three color. Whenever it has been marked, wherever it has been marked with the blue one, it indicates that it was the best practice which I was being followed. Right? But now has been made part of the LFAR. Yellow one, absolute new requirement. And red one was there earlier, but now certain criteria or the norms have been changed into that. Okay. Now let us get into the discussion. Like first part is the asset, Roman 1. Then they talk about the liability. In asset 1.1, rather I'll say, is the cash, and it runs into the various questions. Mainly, if I don't read each one of the question answer, what are the points with related to the cash? One, effective dual custody within the limit. If exceeded the branch cash retention limit, it has to be reported how many times. Cash has to be checked by the branch head periodically, and insurance copy. These are the few things the auditor needs to comment upon. How will I be able to get the exact evidence as to the effective dual custody? Because I or my staff as an auditor, as a statutory auditor, when will ask to check and verify the cash, certainly both the officer will come, they'll insert their respective key to that Almira, which has been embodied with the civil structure over there as per the guidelines, circular. Then I'll see it's there in the dual custody, but actually both these key are kept by two separate officers, and how a document supporting the same would be your key movement register. One can always verify the same. There is a duplicate key process. The duplicate set of the key would be kept by the branch to the nearby branch or the RO as per the bank's internal policy. Some of the bank further goes a step ahead and ensure these keys are exchanged at the periodic interval and both the set of keys are equally depreciated. Some of them does not do it. So these all are the points. In the shortest possible time, one can verify provided one have this in mind and according to this checklist, right? But after reaching the branch, or the junior does not know what is the meaning of effective joint custody or at least a joint custody of the keys, so they would be certainly going to waste the time over there, and they would be guided or rather carried away by the guidance given by the bankers. So planning requires this. Not only the advances, but every part of the LFR, every part of the balance sheet for which I am responsible by going to sign the balance sheet. So regarding cash, these are the points I would be checking. How? Now I already know that how I will be getting into the effective dual custody. Second, branch head or the officer in charge had done the periodic cash verification or not. How shall I get to know that? Which document I would be asking for? Cash scroll, manually maintained even today, will have his sign mark as the periodic interval checking by him. New word, you can see the blue mark over here into the presentation, which talks about checking of the cash balance at ATM as well. Why it has been added with the blue mark? It is the new change. But earlier also I used to check this whenever I used to refer to the cash of the bank branch. That means the cash into that double law plus the cash into the ATM. Which ATM? Branch linked ATM. Branch linked ATM, meaning thereby that ATM cash is fed in by the branch from its cash. At certain places or at majority of the urban areas, this is now not done by the branches but done by the respective agents. But certain banks still have the branch linked ATM, and maybe at the semi-urban or the rural area, the ATMs are managed by the branches, sometimes not by that CMS or other cash management agencies. So this I'll have to check. What is the minimum balance, cash retention limit the branch can carry and whether on an average it is within the same or not. Within 12 months, if for 12, 18 or 24 times the cash balance has gone beyond the limit, I will not, as a statutory auditor, I will not get into the details of the same. But out of 250 working days of the bank, some 50 times cash balance has gone up, means I need to worry. I need to get into the reasoning. What are the accounts who are pushing the cash balance up, or is there any management issue for remittance of the excess cash? And if the branch is covered under the concurrent audit, what observation the concurrent auditor has put for these instances, that I need to get into the detail and report. Now, one more point they have added, which we were earlier doing as a best practices, although not been asked before. That's why it has been marked as a blue. The total cash balance would be what? A. Cash balance at 4:30 or whatever PM cash closes, plus ATM cash balance of midnight 12 of 31st March 2022. Clear? This is all would be my total cash balance, and auditor would be commenting, reporting on insurance. What generally as an auditor I do, which audit evidence obtaining method do I use? Inquiry and interview, not the observation and collection of the document. Of course, for the want of the time also I'll be doing so. So what I'll be asking for? Sir, what about the insurance policy? They'll say, sir, taken at HO. No problem. I will write, sir, it has been informed to us, it has been taken as HO. Okay, write down. But no, sir, I will also be mentioning into the bracket, I have not seen the copy of this. Wait, I'll write to the HO and get the scanned copy of the same. Will it be enough for you? Yes, sir, it will be fine for me. But otherwise, I was not getting into the details of obtaining that copy. May ask for the copy. Consolidated insurance policy would have been taken by the RO, and whether does it cover the cash balance of my branch or not, I would be verifying and keeping the copy or the soft copy as my documentation. Otherwise, I used to always write taken as RO. 3 word only. Instead of a sentence, I used to write a phrase. I need to write it very carefully. A consolidated policy has been taken by the RO only of the cash or the cash movement as well. If the cash movement is done by the branch or the bank staff, or if it has been done by the certain agency, then no need to worry about the transit of the cash policy. But you have not checked the policy, mention as informed, and I have not checked. Check the policy, mention that only. Right? So this is how I need to go through with the specific question of the LFR. What planning is required? Today with me, and before starting the LFR, whosoever junior is going to help you out with the filing of filling up of the question answer in the LFR, ask him to go through this once, and secondly, use your own wisdom and experience for getting into this question. Spend at least a half a day for certain points related to LFR cash. You need not to spend any time, but whenever I go there or in advance, I would be asking them these much of the points with respect to the cash. I would be requiring to be ready. My cash scroll verification, cash key movement register verification, how many times in a year cash was exceeded, and insurance copy. 4 things in advance. My first department of the advances side will get over. Friends, let me acknowledge it honestly. It is not like that any of us sitting in the audience do not know this, or I know, or I am an expert. No, just every day speaking in the entire March, the LFA or anything related to the bank audit, we are acknowledged as an expert. But rather, I would have read this LFR in this March or not less than 30 times so far. So that's the reason I am able to summarize it for you. You may take that summary from me, you may read it once and geared up for the same. But otherwise, cash scroll, if put before you, how to check it, what query you can identify it, we all are expert of the same. My purpose is to facilitate you to crisply go through the overview of the LFAR, have your own checklist, and quickly ask the things from the branch. Have always one person in a team who does this, follow from the branch head. Whatever I have asked for in the morning, after every 2 hours, the way branch head is asking for a cup of tea or coffee to me, my assistant would ask, sir, morning 5 things asked for, kindly ask your officer, cashier, clerk to provide us. Otherwise, for whatever 3 days I will be doing a working there, they will ensure that I forget these things and they may never have to provide me those documents which I had asked for. Or else ask, sir, who is the subordinate to you, or a second officer, or whomsoever, by whatever name called, with whom me or my staff would keep on following up for these pending issues. Otherwise, half of the thing would only remain into the checklist, never into the answers. And sometimes, without looking at the things, I will not be marking it to be negative, but I would have to mark the answer as affirmative. Then I'll have to conclude it. What to do when cash retained by the bank is regularly beyond the limit? Vikramji, generally, I'll very quickly in 1 minute respond to this. I as an auditor will get into the reasons, because my treasury has fixed the limit. I cannot keep liquidity more than this. There is cost to the capital which I am carrying. So it is not permitted, not allowed, because it's unsecured. Point number 2. Point number 1, as I already told you, the treasury will not wish this much of the cash balance to be carried by them, and they want to make it profitable investments as per the treasury operations. I should get into the details. What are the reasons? And if I am not able to find out the reason, mention these many number of days is not acceptable. The bank or the region, HO, branch, whosoever is there should take the concrete action. If I have been the concurrent auditor, I get into the details of the reason. What are the accounts? Maybe a petrol pump, maybe a school or such organization who is collecting and depositing the cash. Some huge retail traders nowadays that has been reduced after this barcode scanning, even at the small or the retail shops. Certain organizations receiving donations in cash to that anonymous donation box. These all are coming and depositing the cash at a periodic interval at the branch. This might push the cash balance up, or the branch people are not conscious enough to send this excess cash to the respective nearby branch or the HO or the currency chest or whatever. Or they think that tomorrow somebody will come for the withdrawal, let me keep it with me. That attitude is not acceptable. If anything like this comes, I told you now, in 12 months, how many times, 12 or 18 times the cash goes beyond, I will not be worried. But if beyond that it goes, I'll be commenting upon that it is kept frequently these many times into the respective financial year beyond the limit, and I'll be going ahead. Okay. Point number 1 in assets is getting over here. Point number 2, that is talking about the balance with RBI, State Bank of India, and any other bank. Whenever I'll be asking this question to them, they'll say that, sir, after CBS, we don't need any other account to be managed or maintained. Our RO is taking care of everything. We don't have the account. I think I would be agreeing to it. No, I would be asking for the evidence. If the account is there, there are just 1, 2, 3, 4 points which are to be taken care. But first thing I need to ensure as an evidence is whatever he is submitting, there is no account. How would I be vouching that or confirming that? What I'll be doing? Sir, go through the balance sheet. In balance sheet, has there been a reference or a mention of any other bank account being maintained by them? Yes or no? If it is there, sir, this procedure to be followed. What the answer you will be getting? Sir, it's a old bank account. Before I took charge as a branch head of this, sir, I don't have any issue if it is the old account or the new account. Everything is old before you took charge of here, right? So, no, sir, it's not operated. Okay, no problem. If not operated, then also I need to take point number 1, balance confirmation. Point number 2, reconciliation. Point number 2, A and B. What are the reason if it is not reconciled? Point A, the reconciliation for the purpose of not acknowledging the entry. Point number 2, reconciliation on account of revenue item. I thought I am a bank. State Bank of India is also a bank. I am managing the account with it. It will not be doing any charges, not be charging any charges from me because I am also bank. He is also bank. But they said, no, you are my customer. I'll be charging you. So that revenue item which he has charged in my account, I have not acknowledged the same. So that could be also the reason for reconciliation. Balance confirmation, reconciliation, and any such debit credit entry pending for reconciliation unresponded for 15 days has to be reported on. That is the newly inserted point. Are we clear on this? From the balance sheet, I will get an conclusive or persuasive audit evidence regarding whether the branch has maintained any such bank account or not. This is a newly inserted point in a yellow which you are seeing right on your screen is talking about the branches linked with currency chest, branches where the currency chests are there. That money belongs to RBI, not to the respective branch, and certain formalities are there which required to be done that the branch auditor will be checking and commenting on. Third, money at call and short notice. After the CBS and the modern banking, money at call and short notice are not kept at the branch. So no, and the entire thing would be blank. By any chance, if it is there, only the point was to ensure the year-end balance being reconciled with entry and effect of the revenue item like it. Nothing much to be discussed about that. Point number 4 under the asset is talking about the investments. Rule, RBI guidelines. Branch shall not have investment. Branch cannot do the investment. Still, in what situation there would be investment into the branch balance sheet? First, again, if you ask to the manager, he'll always say no, there is no investment. Go through the balance sheet, you will get to know there is. If then these all answers to be reported by the auditor. Very clearly, I am again reiterating, there is not going to be any investment at a branch, but rarely in very remotest possibility and situation we have observed at certain place there are investments. How it is possible? Some of the investments are parked at your branch by the HO for the collection of the easy collection of the income. For example, by any reason they are in possession of certain investment in settlement of the loan or anything. They are having some preferential equity of a company having head office at Calcutta. I'm talking about the days where this demat and other faster things were not there. So they used to park that investment at one of the branches at Calcutta. Reason being that branch would be able to quickly, easily collect those dividend, interest, etc. on those investments and remit it to the HO and whatever. But nowadays with this demat and the modern days banking, you will not find any investment, even such a manner, parked at the branch balance. And as per the rule, branch has no right or authority to make or to do any investments. So be rest assured for that. So that is the fourth point related to the fifth point, advances. Advances के बारे में you got the session for IREC, MOC and other things. So what the LFAR is asking for? LFAR is asking for the deficiencies in process, documentation and various other aspects related to advances. Okay? So there we are supposed to report and comment and compile certain informations like stock statement not submitted, pending for review, whatever. Major change or the bigger change is with respect to the, I'll not say the definition, but a criteria of the large borrower. Criteria of the large borrower has been changed. What are the changes? Earlier, what we used to do? 2 crore and above, or some 5% of the aggregate advances. Now, this criteria has been changed. So changes are marked here, you can see in red. Large advances are those in respect of which the outstanding amount is in excess of 10% of the total outstanding aggregate balance or of total advances, fund base and non-fund base of the branch, or rupees 10 crore individually, whichever is less. So larger branch, the threshold would become 10 crore, and into the marginal or the smaller branch, again I would be taking it as 10% of the total advances. Total advances means here fund base and non-fund base both दोनों लेना है. ठीक है. Now read the point with additional requirement newly inserted. For all the account above the threshold, who would be above the threshold, 10% or 10 crore and above? What is to be checked? The transaction audit, account specific details to be seen and commented. Whereas below threshold, at least the process need to be checked and commented upon in those large borrower account. I'll have to go up to the transaction level and every aspect that large borrower accounts annexure which they are preparing and keeping ready for the auditor will also have various aspects like rate of interest, these, that, everything commented upon by them. And further, I would be getting into the details of the same. Right. So this is what I would be checking. Annexure of the large borrower, they would be making it available to the auditor. I need to make comment based on that observation also. And specifically this yellow is the new requirement up to the transaction level audit. If required, I'll be getting into or I would be doing there. Great. Critical comment based on the review of the above and other checklist should be given in the respective paragraph, as I already mentioned to you, into the respective annexure of the LFAR. Right hand side, I have marked all the checkpoint for this particular point, what the auditor need to check or how the auditor need to go ahead with. And at the bottom, in certain slides, some of the slides, you will find the reference of the respective circular of the RBI, which would be helpful to us in doing the audit of that respective paragraph, respective field of the LFAR. Again, I need to give the entire list of the accounts which I have checked. The documentation requirement is now no more limited to my own documentation file, but they are also asking you to get into the details of the same. So here I'll be giving the list, total account name, balance at the year end, fund base, non-fund base, how many accounts you have checked in terms of number as well as in terms of the value. At the bottom, through percentage, it would be reflected and it will be known to the stakeholder and the users of this report. Second point, after we have given the list of the accounts which we have checked as well as the classification and observation with respect to the large borrower, that is about the credit appraisal. Branch is doing credit appraisal as per the instruction or not, and any other major shortcoming I would be reporting on. Here regarding the credit appraisal, I tell one thing, how I would be reporting to this or getting into the details of this. One simple answer to this is one need to develop the habit of reading sanction letters or the renewal notes. There every terms conditions are mentioned, and as per that the renew or the sanction procedure must have been carried on with. If not, you will be able to make various queries in the following points. Like revenue leakage you will be getting here. See, there would be two types of the MOC. One with respect to advances classification, two with respect to the revenue leakage or with respect to the P&L item. My last line into the sanction letter reads like, non-compliance with any of the terms condition above will attract penal interest at the rate of 1% over and above the regular penal interest. Over and above the regular penal interest which would have been charged for non-submission of stock statement, insurance, pendency of the review, etc. But what could be those non-compliances? For example, it is the loan given for the construction of the property. What is the condition? 25% payment would be released on the plinth completion, on the submission of certificate by the architect. It's not found in the file. Completion certificate, the development authority of the respective city would give, not found. Non-compliance with terms of sanction, revenue leakage. Credit appraisal, not properly done. If doubt arises with respect to the sales, etc., which has been taken into consideration, compare with the balance sheet, ask for the GST returns if doubt arises, or the large account where I am to check the transaction level audit. Sir, sanction letter reading will give us a lot of insight about bank's view, methodology with respect to the respective account. Sir, very simple query you will be able to find out over here that in that account they are maintaining the current account with another bank which needs to be closed. In renewal letter, it is mentioned within 6 months you are supposed to do it. And every month submit the bank statement of that bank branch account which you are maintaining. They are not complying with this. Get into the details. And whatever are the observations and queries, make a mention of them, and that will further fetch you penal interest and MOC related to P&L with you. Are you getting my point? Further, we discussed two new requirement, quick mortality, which we were doing earlier. That within, I will share the presentation, don't worry. I already mentioned it earlier. Quick mortality means what? Loan you have given and getting NPA, getting bad within 12 months. List of that need to be given because from banking perspective, they may consider it to be a bad sanction or fraudulent transaction. That's why auditor is specifically need to give the instances of quick mortality. From where I'll get to know this? You have got your separate annexure or the certificate or the list of the NPA ready. In each one of them, you have got the date of NPA. From there, you can find out, and otherwise, you can ask to the branch head, and you will get certainly the details with respect to the same. Point number 3, very interesting point, newly inserted. Applicable rate of interest is correctly fed into the system. What is applicable rate of interest? As per the sanction or the renewal. And if the rate of interest is linked with certain benchmark rate, I should know how many times in a year the benchmark has changed, and as a link with that benchmark rate, my rate of interest would change. Sir, if my rate of interest is going to be changed, linked with the renewal from when the value dating of the same had been given, changes would have been done at the time of renewal conclusion, but from which date the rate change of the interest rate has been made effective. Sir, although it is any one of the best software they are using, due to any technical errors or some human error, we had come across the cases and instances where into the system the correct rate is not charged. So on sample basis, see how I approach to this. Reading the question, explaining this, decoding this for you is a simpler, but the question in your mind will arise that out of that so many accounts, how I go ahead with this? See, you have got in point number 1, list of the large borrower ready. So in every large borrower annexure which the branch has kept ready for you, there they have mentioned the rate of interest applicable. Ask your junior or assistant in every large borrower to check the rate of interest. And on sample basis, in certain selected account, those may be smaller account also of a two-wheeler loan, car loan, housing loan, retail loan, whatever. Out of the fresh sanction, a reasonable sample one should be able to draw, and the large borrower would form the another size of the sample from the existing or the total borrowers at the branch. And read the question again. Actual rate into the system I am to check. They will not ask you that as per its credit rating or the credit appraisal, actual rate has been charged or not. That would be covered under the credit appraisal part. Here which is being asked for to be checked by the auditor, सिस्टम के अंदर सही रेट डाला है या नहीं, या सिस्टम वो बोरोवर के पास से करेक्ट रेट ऑफ इंटरेस्ट रिकवर कर रहा है या नहीं. System, they have used the word very clearly and categorically. Right? Next one. These are the two newly inserted points need to be taken care little more. If I have to talk about this command, tomorrow we have got, of course, Premnaji, one of the very superb faculty on the technology, HACL INQ and HACL HPT or some commands are there into the Finacle. These two commands will give you the list of the rate of interest, and from there you are going to make this point. This is what I already mentioned to you. You should know when periodically the rate of interest linked with the benchmark, external benchmark like MCLR, EBLR are changed, and accordingly my rate of interest into the bank branch will change. I have mentioned RBI circular below the slide as well. Have you come across the frequent review, rollover, short review of the term loan? If yes, give the details of the same. CCOD के अंदर ये observation generally मिलेगा. Renewal register if manually prepared or through the CBS, one will be able to find out the details of the same. And one should ask for why there was short review. Why there was rollover for the short times. And if any of these things found to be suspicious, report every such case. Okay. Further in advances, credit rating. I should know three things are there into the credit rating. When applicable, where applicable has been obtained or not, and if obtained, effect of the same given or not. What do I mean by this? You should know bank's own policy. Bank's own policy for or in which cases there is going to be applicability of external rating. Certain larger loans would be subject to external credit rating. Right? So you should know which borrower 1 crore and above, 5 crore and above in this particular bank is subject to credit rating at which periodicity. 6 RBI approved credit rating agencies are there. From any one of those 6, it must be obtained. And last line, credit rating agency has been, credit rating obtained from the agency had been fed into the system or not. Why am I emphasizing on this much? Sir, the accounts where credit rating is applicable, you will find that it has not been obtained in certain cases. Reason, they know it is going to come out or end up with a poor credit rating, and if that credit rating is fed into the system, the account would have effect and impact on renewal or maybe the rate of interest being charged. So many a time the credit rating obtaining process is being delayed, or they ask that do it after March, after my audit gets completed, or sometimes the credit rating is obtained but accordingly not fed into the system. That's why I divided the question into 3 parts. You should know where applicable, obtained or not, after obtaining, effect into the system given or not. Okay? That is the new requirement inserted into the revised LFAR with respect to credit rating. Sanctioning and disbursement, all the terms, condition and every terms condition which are put up by the higher authority, if they have sanctioned the same, have been properly complied with or not. Margin, equity to be bring in, and accordingly the date will be released by the bankers. Get into those details and check whether it has been properly complied with or not, and from the respective authority. Nobody will do the sanction beyond the delegation authority, be rest assured for that. Terms and condition complied with or not. See, many a time I told you, terms condition, from where I'll get to know, read the sanction letter very, very carefully. You will come across many instances where the terms conditions are not properly complied with, and comment upon the same report every such instance. Fresh sanction and renewal, read the sanction letter very, very carefully. I gave you the instances of certain points where you will find the terms conditions are not being complied with. Quarterly CA certified stock statement to be given. Unsecured loan not to be repaid without intimating to the bank. Why? Because in the DE ratio, debt equity ratio, they have considered unsecured loan to be the quasi equity, part of the equity, and accordingly your limit to the debt has been arrived at. So if you reduce your unsecured loan or the capital balance, then automatically your debt equity criteria as per the bank would be deteriorated. So every such terms condition which is mentioned over there needs to be strongly complied with. Auditor is required to comment upon the same. Buyback, as per the RBI guidelines, or even as per the Companies Act, you know that buyback has to be made from the free reserves and own sources. If at all buyback took place, for that any loan must not have been given. Rarely you will have such a large borrower into the bank branch. You should know whether there has been any buyback with respect to those companies, and if you come across this, ensure that it is not from the banks. Entire advances would have two things. One, the operations of the account which I would be checking in system, and second, the documentation. Mortgage deed, signed documents like LOD, like net worth certificate, and every such documentation. So whether this documentation is properly done or not, certain documents are to be complied with before sanction, certain documents at the time of sanction, and certain documents after sanction. For example, RC book of the vehicle would come after a couple of months of the sanction. So that document would be collected at that time. But at that time, what answer we get? Sir, housing loan processed at central facility, branch not responsible. Why it is not responsible? It is forming part of your balance sheet. It is serving the interest and income to your branch. And that processing agency has told that within this many months and this many time, periodically, you are going to obtain DRC book, yearly insurance, the insurance policy, and RC book must have a mention of the bank's name. So merely a central processing agency has to process the file does not make the branch manager relieved from any of their responsibilities. Large borrower, many compliances would have to be checked, but that's the reason I took a smaller example even of a vehicle loan. Sir, into the retail loan, vehicle loan, you must check this thing. What? These loans are sanctioned based on quotation, disbursed even based on the quotation. Invoice would come along with the machinery, along with the vehicle. What is happening here? Sometimes, see, when I talk about the car which we are using, I know which is the top end model and which is the second model, third model. In this three range also, there would be a difference of lakh to 3 lakhs of the rupees. But do you know in auto rickshaw or the three-wheeler tempo, what is the top end model and what is the bottom model? Sir, he has brought in the quotation of the tempo which costs 3 lakhs rupees, that model. After margin and his eligibility, bank did the sanction of 2,60,000. He took the delivery of the tempo or the auto rickshaw, which is worth 2,60,000 only, the second model or the third model, not the top model. How can I get to know? Right? So what deviation they did? पूरा मार्जिन बैंक से फंड करवा लिया, जो जनरली नहीं होना चाहिए वो खुद लाना चाहिए, राइट? From where I'll get to know this, PSR, post-sanction review, that note must be there as a part of the documentation post-sanction into the files. Post-sanction review report, inspection report, if not found in the file, that shows that there has been certain deficiency with the documentation. When you'll ask, sir, show me the inspection report. Sir, charges are debited. You can see I'm not concerned with the charges that I'll see separately as a part of my revenue audit. Where are the reports? Sir, I'm not able to find it. Will show you tomorrow. That means that, sir, I'm not prepared it. I'll prepare tonight after you go and show you tomorrow. What mistake he'll do in this? The manager till now who had been telling you this, sir, I joined in February, I joined in January, would have signed all 4 quarters inspection report. Even though he has been posted for the entire year, the rule says that 2 consecutive inspection report would be signed by 2 different officers. But in that, Alvali of just showing this inspection report to you overnight, he would be giving you the audit evidence where he would have done such mistakes. So documentation, lien marking, very simple thing which we used to always see. And CBS, this lien marking is even done by online method. Now the new word which they have inserted is, earlier the lien marking was done only on the deposit receipt. Now the lien marking is to be done on not only the deposit receipt, but in a yellow marked word which you can see on your screen is the related accounts also. Okay. Further in advances, review and monitoring and supervision, any of the account or the major shortcoming of the concurrent auditor or otherwise should be reported and complied with within 3 to 6 months. Earlier it was 6 months to 1 year, and any other which is pending for 1 year and above, now it has been reduced to 6 months and above. Stock and book date statement periodically submitted or not, auditor will require to comment upon. And the very, very important question they have added this revised LFAR is the DP drawing power properly computed or not? One simple thing, every account, I don't need to get into the details of the stock and book date and all. If required, I'll get into the detail. First thing in the Finacle I'll be doing is against the DP, what is marked, what is mentioned, whether the DP is maintained or derived. What do I mean by this? Maintained means, derived means they have entered the value of the security into the system, and based on that value, after deducting the margin and the formula, DP has been derived by the system. Maintained means they have directly given you the DP. So wherever I come across that maintained thing, it's a eye-catching thing for the auditor from the system. The rest all thing, what I'll be checking? Go through the statement, properly submitted or not, credited, deducted or not, margin properly debited or not. Sir, in the proper format, they are not submitting the stock statement. Why? And as per annexure, in annexure, what you will find? Some list of the tally ledger has been given. No, nahi chalega. They need to give it into the bank's format, that what is my raw material, what is my finished goods, what is my WIP. Sir, I had come across the instances where into this, they would have added loose tools, dies, jigs, molds, and DP has been given. No, they are not part of the inventory on which I have given the funding as a bank. Slow moving, non-moving, not separated. Datas, 90 days and above, less than 90 days, not separately given. Sometimes just to do some gimmick or the intentional changes, per unit rate of the WIP, they will increase and ensure the higher rate of stock would come, because bank people will only look at the total stock at the end in the stock statement, put it into the system, DP is derived. A lot more thing can be discussed about this. You also imagine and understand what all problems could be there with respect to the wrong arrival of the DP. Sir, look at the 2 consecutive bank book statement and see whether there is any movement or not. Are they able to recover the funds from the debtor or not? Since 3 months, there is a constant, still that paper, they have not classified to be more than 90 days. Easily you will be able to verify and check. And if he has given the payment, it must be reflected in my CC account, which is not. Right? So these are the few checkpoints through which I'll be able to catch hold of DP not properly arrived at. Latest audited financial statement must be obtained. We always used to check, now added into the LFAR. Sir, within next 10 minutes, I would be able to conclude, as you have given me that 1 hour. I think I've already exceeded the same.
Oh, sir, continue. We all are here to learn, sir.
Okay. So at least 15 minutes में sir हम conclude करें, वैसा try कर रहे हैं.
कोई बात नहीं सर, कोठारी जी करिए, हम लोग हैं.
जी विवेक जी, thank you. So system of obtaining and reporting the stock audit periodically. Again, those 3 points which we have taken up into the credit rating would come here. What are the 3 points? I should know the policy in which account the stock audit is required to be done by the third party or the independent auditor. Point number 1. Point number 2, whether as per that requirement during the year stock audit is carried out or not, report obtained or not, and if report is obtained, what are the shortcomings? Sir, intentionally they'll tell you give the report after March. Otherwise, there is some huge changes or the adverse comment, the entire account or the operations of the account will get affected. So I, as a statutory auditor, must know the bank's policy about how much amounts of the limit they order the stock audit. And as per that, stock audit has been done or not, report obtained or not, and the effect of the report given or not. Right? And if there is any non-compliance, any shortcoming into the stock auditor's report or even stock audit report not obtained, not ordered, comment to be done by statutory auditor. Last 2 points which you can see that is the newly inserted or specific requirement of the answer by the auditor. Earlier here, what used to be there? Non-corporate entity obtaining a limit beyond 10 lakhs were required to submit their financial statement. But with the audit limit and all increasing, and many a time they will not be having the audited statement. So they have used the word as per the bank's policy, where the non-corporate entities are required to submit the audited financial statement. The auditor will have to check the same. ड्यू डिलिजेंस रिपोर्ट के बारे में यहाँ बात की गई है. नीचे मैंने उसका 2008 का सर्कुलर का रेफरेंस भी दिया है. ड्यू डिलिजेंस रिपोर्ट एंड व्हेन इट वुड बी एप्लीकेबल. ड्यू डिलिजेंस रिपोर्ट वुड बी एप्लीकेबल ओनली इन केस ऑफ द कंसोर्टियम फाइनेंस when your bank or the bank is a participating bank, not the lead bank, and outstanding is more than 5 crore. Then in that case, you are supposed to obtain the due diligence report and keep it on record. And if there is any adverse observation by the issuing authority of the report, take the action and the comment. So that is about the due diligence report. Inspection of physical verification of the security by bank official. I already gave you the method and the reasoning for of the same. Substantial deterioration in the value of the security once you found in one of the latest valuation reports. NPA account hai ya regular account, and if there has been a substantial deterioration as per the para number 4.2.9 of the master circular, deterioration is less than 50% of the value, it would be classified as substandard, and less than 10% value only left of the security would be classified to be the lost asset. So be very, very careful about the same. It will even have impact on the provisioning as well as the classification if the account is standard. Advances which you have checked, you have come across any deficiency with respect to the security, inspection, adverse feature, etc. So that is the point. Inspection report, etc. would reveal this fact to you. Red flagged account as per the system, and what are the policy? Obtain the list and the action. Very interesting point inserted here. Comment on the adverse feature considered significant in top 5 standard large advances. Certain point which you want to draw the attention of the management. Already reported elsewhere, but still, if they are material, report here specifically. From where shall I get to know this? Easily, you already have the comment of the large borrower with you, right? That annexure of the large borrower is already there with you. From there, any adverse comment, if you come across for those standard accounts, you are going to give a comment here with respect to them. Lease finance activity, if at all being done, certain norms are there, guidelines are there, whether compared with or not. Further general instruction. They have specifically mentioned now that classification of the NPA should be done absolutely without manual intervention. Escrom is a generally known name of the software with the Bank of Baroda and certain other banks who uses the same or the different methodology. From this year onwards or last year onwards, we want to ensure that this entire thing is being done without manual intervention. Otherwise, 5 years back, if we talk about this, it used to be very open thing. People used to change, modify intentionally, sometimes date of NPA by to make the changes into provisioning, security value, sometime being changed, accordingly provisioning will change. So ensure that there is no manual intervention. How will I get the evidence? सर बड़े सिंपल से अकाउंट ऑडिटिंग स्टैंडर्ड हमारे पास है, वो क्या है? कंपैरेटिव्स. लास्ट ईयर ये डेट ऑफ एनपीए इसका क्या था, लास्ट ईयर ये एनपीए में कहां था, सब स्टैंडर्ड है, इस साल लॉस्ट आना चाहिए, इस साल डाउटफुल में जाएगा, बाद में लॉस्ट में जा रहा है या नहीं, D1, D2, D3, whatever they call it as. So this will give me an evidence, yes, the system is operating effectively. Secured, unsecured from year 100% provisioning, secured as per the security value and as per the IRAC norm provisioning. This few test check will give you a clarity about non-manual intervention, and otherwise also you'll get a satisfaction about the same. Comment by the auditor will be required over here. Not only D1, D2, D3 or the lost substandard account, but special mention account also standard but special mention. 30, 60 and 90 days outstanding. SMA 0, 1, 2. Auditor will require to comment on the classification of these also. Newly inserted point. Earlier, I used to comment on lost asset, doubtful asset and substandard asset. Here, they are asking me to even comment upon the classification of SMA 0, 1 and any MOC which you have given, you need to mention in the LFAR as well. List of the account in excess of 10 crore which have either been upgraded or downgraded. Comment. IRAC norms, if not compared with or any observation, comment here in LFAR as well. Branch has reported the restructured or the rephase account, what Dhananjay was speaking about. RBI guidelines with respect to restructuring has been followed or not. All blue things are what we used to check. All these things now has to be reported specifically. Yellow, new requirement. Complied with the regulatory stands for resolution of the stressed assets, generally being done at the HOZO level. You need to comment upon this. If any upgradation you have come across but you do not agree, comment. IBC लास्ट ईयर ये हमने नॉट एप्लीकेबल लिखा था, रीजन कोविड की वजह से आईबीसी सस्पेंडेड था 6 महीनों के लिए. अभी आईबीसी प्रोसेस हैज टू बी डन. जनरली दैट स्ट्रेस्ड एसेट्स एंड द आईबीसी प्रोसीजर इज बीइंग टेकन केयर एट द एचओ और द जेडओ लेवल, बट इन सर्टेन केस इफ एट द ब्रांच लेवल इट इज बीइंग देयर, आई नीड टू एंश्योर दैट हैज बीन properly complied or initiated at the branch or not. ECGC, I am already signing a certificate which is to the same, but still now the details are to be complied with here. How many claims are lodged, number and amount, rejection, and the balance at the year end. General instruction with this advances. Execution of the decree obtained from the court mentioned very specifically. Recovery procedure, prompt or not, the common earlier years points. Recoveries has been properly apportioned or not, you should know the branch policy. First it will go to the interest, then to the capital, so on and so forth. Documents is very interesting and important point which has been modified and amended, because State Bank of India, Bank of Baroda and many other banks are following centralized processing of advances. I give them the list that out of this 50 vehicle loan which you have done in the year, I want to see some 25 account. Bole, not possible. It is done at the central office. You give smaller sample, then at 2 hours window you will be getting there. You go there, check that, go ahead with. So with this centralized processing, whatever process has been done, am I satisfied? Or how I had been dealt with the same by visiting and whatever manner, I am to mention it over here. This is a good change because many places, this kind of, including CC account, the SBI is maintaining at certain SME, CC and other different processing or monitoring zone hub. So there, what is my observation and any adverse feature I come across, I need to comment on there. Deficiency in the credit review monitoring mention. नॉन फंड बेस्ड में पहले हम क्या देते थे, लिस्ट ऑफ द एलसी डिवॉल्व एंड इन्वोक एट द ईयर एंड. नाउ व्हाट इज आस्किंग फॉर ड्यूरिंग द ईयर, पूरे साल में जो हुआ है उसका लिस्ट फिनेकल से मिल जाएगा. नथिंग मच टू वरी अबाउट. इंटरचेंजेबिलिटी, ये क्या होता है, आपको 50 लाख रुपए का नॉन फंड बेस्ड लिमिट दिया है और 25 लाख रुपीस का सीसी आपका है. Out of 25 lakhs of the CC, I'm using 10 lakhs rupees. But there, instead of 50 lakhs, I need to give bank guarantee of 60 lakhs. So they would allow that interchangeability, non-fund based limit to be utilized from the fund based limit. That's okay because non-fund based using against fund based is okay, but fund based from the non-fund based would be a dangerous situation because there the security, processing and charges would be different and very much relaxed compared to the fund based limits. Some of the private banks are giving this kind of the facility. Few of the nationalized bank in competition with them has developed this kind of the product. So you must know first whether this is allowed at your bank or not. If allowed, this kind of account is there into my branch or not. If yes, then how many times these kind of the interchangeably was allowed and whether it is as per the terms of sanction or not. Other asset, sundry and suspense. Generally, we are supposed to comment on the accounts or the entries beyond 90 days. My point would be here to check the ledger of this. How many entries were parked into sundry suspense, why they were reversed in 2-3 days, and whether it was proper to park and reverse the entries at these sensitive accounts, yes or not. Any intangible item under the head like losses which are not provided for, pending investigation. आगे का point आएगा contingent liability. Contingent liability from where I get it? ब्रांच लेवल पे कोई होगा ही नहीं. एंड आई विल बी कंक्लूडिंग, नो सर, गो थ्रू कस्टमर कंप्लेंट रजिस्टर एंड इफ यू फाइंड अक्रॉस एनी कंप्लेंट व्हिच इज आस्किंग फॉर द ह्यूज रेट ऑफ इंटरेस्ट रिकवरी एंड इफ यू फाउंड दैट यस एप्लीकेशन और द कंप्लेंट ऑफ द बोरोवर इज 5, 10, 50% वैलिड, आई वुड रिकमेंड इट टू बी एक्नॉलेज एज कंटीजेंट लायबिलिटी. कल उठ के वो केस बैंक पे किया और जीत गया तो बैंक को इतना पैसा वापस देने को रहेगा. So that would fall as a contingent liability even at a branch level, sorry. Because many a time we ask for the query, we are being given only one answer, it's at HO level. Sir, branch में ऐसा कोई होता ही नहीं. क्यों नहीं होता है? होता है तभी तो LFAR में क्वेश्चन ड्राफ्ट किया है. They don't want any lengthy document to be taken by the auditors, right? Now, deposits, identification of the dormant inoperative accounts, any large movement, window dressing before and after the balance sheet date. FCNR में एक पॉइंट उन्होंने ऐड किया है, क्या बोल रहे हैं? Whatever deposits which had been renewed as FCNR, still they continue to remain as FCNR or not, right? By any chance the person is no more an NRI and his renewal has been done as FCNR account, one need to take care. Minimum balance requirement complied with or not, but here there is RBI circular. अगर minimum balance नहीं है तो charges लेंगे, but charges are to be recovered proportionately. For example, your minimum balance requirement is 10,000 rupees and you have kept balance of 5,000, so the charges would be taken to the extent of 50%. This circular is there in favor of the account holder, and accordingly the things will move on. Outstanding item, I'll be giving comment on. Contingent liability, I already explained where it will come. P&L account, I'll not get into much detail. Deposit, जो auto renew है, उसके अंदर deceit का कोई deposit है, particularly in COVID period, there had been some such unfortunate cases, so need to be little careful about that yellow point. Otherwise, I just want to talk one point which will clarify all the things about the P&L is last 4 months. Identify the average outstanding deposit versus interest expenditure, average outstanding advances versus interest income. This ratio should remain constant. If I see that there is no increase in the deposit, but the expenditure of the interest has increased, there is no increase in advances, but the income or has reduced or otherwise, that means there has been some error, and it will give you a persuasive audit evidence to get into the greater details. Gold bullion and security item, this new point you added, but it is not much relevant because at the branch nowadays no gold and bullions are kept except the gold and bullion against which the loan is given. Otherwise, that selling wala gold bullion to abhi raha nahi hai. They have started selling the paper gold in terms of the bond. Books and records पहले हमेशा हम लिखते थे CBS है तो सारी चीजें CBS में now they categorically mention CBS के अलावा which manual books are they maintaining? Give a comment. During the year, if at all there has been IS audit, give the comment on the compliance level. Exceptional report generated and verified by them or not on sample basis, I'll also be checking those exceptional items. Major observation pending at the year end. If at all there is a manual intervention, proper policy to be followed. Data integrity to be commented upon by the auditor. कहां से पता चलेगा? एक कस्टमर मास्टर के अंदर क्या क्या चेंजेस हो रहे हैं, NPA classification is accurate or not, and major item of the P&L if you will check, if you are finding them to be satisfactory, and in the earlier point the rate of interest, these major few points you find to be satisfactorily, mota moti one can make a comment that yes, the data integrity is there. Any inter-branch account reconciled for remaining unreconciled for more than 7 days to be commented upon. If during the year fraud has been reported, auditors would require to comment and ask for the confirmation, etc. Concurrent audit report में से आपको पता चलेगा if the branch is covered there. KYC का एक नया point लेके आए हैं. What they are asking? KYC and PML accordingly, whatever early warning signalings are there and other guidelines are there, whether they are being followed or not. We'll be just checking that red flag accounts properly done by the system or not. Every account will be mentioned to be high, medium, and low risk category, whether that has been done or not. And on sample basis, if there is no concurrent audit, on sample basis, 2-3 account opening form, you may verify. Otherwise, take the clue of this from the concurrent auditor's report. And lastly, yes, MIS check the branch's proper system for the same. Through this test check, you would be able to identify whether the MIS is working properly or not. And the last point, this also we were doing earlier. Whenever I used to start audit, what I used to ask, sir, last year ka LFR dijiye. So during the year, including last year's LFR, what all other audit has been taken place, check the level of compliance with the same, and if it is remaining not complied with, give the comment on the same, right? So again, how to approach and all this, all theoretical point, I had already gone through it. So in a very short time, whatever best I can deliver, I had gone through this. Sir, I would be sharing this PPT with you tomorrow, so you can share it with the other members. If you have got any queries or branch se phone kariyega, I would be there to respond you to the extent of my knowledge and the limited knowledge and the possibility. Right? Thank you, Vivek ji. I was just told to take up the session tomorrow, today afternoon, somewhere at 3 o'clock. But in whatever short span, whatever I could do, I tried to justify the subject. Thank you one more time. Thanks a lot, friends.
Thanks a lot. I think we two people are here. One having the VP from Gujarat and President from Bengal, or I would say East. So we are lucky enough that we are getting proper representation at ICI. And those two people are really fighting. I know Aniket ji for last 6 years. I have worked with him in forensic accounting standard drafting. I was one of the person, and I also worked with him in the FRRB. And we are really very happy that the two person who are at the helm are really who can work for the profession take forward. So first of all, congratulations to Kothari ji for getting a representation at ICI with the VP Aniket Talati ji, one of the second youngest member as Vice President in ICAI. first being Mr. Rahul Roy from East.
Yes.
And I'm really very happy that at the last moment, due to unavoidable circumstances, we had to approach you and you were really eager to be there. And it's really very difficult at this last moment to come and speak on any platform for that matter without knowing the crowd and the people who will be there. But I am very thankful to the 36 participants who are still there. There are people who are ready to learn. And we have overrun by 40 minutes. Still, we have people who are attending. So that shows the passion of the people who want to learn and who want to stay till the last moment. So really thankful to Narayan R. Bhariji from Baroda. I have got many friends in Gujarat and Baroda, whether it's Mr. Durgesh Pandey, Aniket ji from Ahmedabad, and many other people. So, sir, you have taken a roller coaster ride, and you really justified the time you were given, because what was a session of say 2 or 3 hours, you did it 1 hour, and that is what shows of a good speaker. And friends, if you have any question, you can just write on the chat box. We can take 1 or 2 questions. And if we don't have a question, I think we should move forward. And I really appreciate one more thing, Nayanji. When we are talking about NPA, to all the branch auditors, I would say, when you go for the branch audit, you take the list of PNPA, potential NPA, in the month of December, which was made, because it is the work of the branch manager to collect the payment or to do the collection, and is very aggressive in doing the collection. So you ask for PNPA. If a person says that we are not making a PNPA, potential NPA list, then you can give a control aspect that the branch is not managing its NPA properly, and there's a lapse of a control because that is required as per the branch IFC, SOP, whatever we can say. And from that PNPA, we can see that how many NPAs are there which is still continuing, and those NPA which was no more NPA on the month of March, or which was not an NPA in March, how it came out of NPA. You may find that there is a debit or credit NP together in the month of Feb, which is done from zonal NP. And what happens, what I have seen with my experience of central audit, that whenever you go and see that NP in the Finacle and you type Control M, you get the complete voucher. And what the zone does, that they park a combined entry for all the branches, all the accounts in the same branch, instead of parking a single entry. So within one review of with one verification, you get a good amount of MOC for yourself, and you are able to justify. In one instance, when I was doing a review in one of the top 20 branches of a bank, it was found that for 6 years, bank was hiding one account from NPA. It was NPA 6 months back, and bank was hiding the account for 6 months. So this is one of the aspects which we can see from the practical aspect, how to do a branch audit or how to review one of the important aspects of NPA. Please go and ask for PNPA form. If you ask for PNPA, the amount of tea and coffee which people were extending, it will get double itself. So thanks a lot, Narayan R. Kothariji, for sparing your time from your busy schedule. And we at ACA would be sending you this mail of digital memento. You can just print it and laminate it and keep in your desk, so that we'll be also proud to have a space in your desk. Being a chairman of from West, you would be having various such, but we also require a small space in your office by this memento. Thanks a lot for your time, and thanks to all the delegates who joined, because none of the speakers are happy if delegates are not there. And we in this virtual world, the presence of delegates becomes more important, because most of the time we are speaking to the screen only. So we'll have more detailed discussion in due course of next 15 days. We'll have a group discussion or something like that of 2 hours, 3 hours on each aspect. And do join us tomorrow. If you have not registered, do register yourself for tomorrow's session, because we have again 2 very good speakers. Mr. Premnath has been speaking at ACA for last 10 years. And Mr. Sonawala is also a very good speaker. And we'll have a good session tomorrow. So do join us sharp at 4. And sorry for delay start today, as Mr. Amarjit Chopra had some technical difficulty and we had started 20 minutes late. So sorry from the ACS side, and do join tomorrow sharp at 4 o'clock. And let's, if you have missed anything of today's session, do visit YouTube channel of ACA and you'll get the recording of it. Thank you, Nayan Alkothali ji, and thanks to all the delegates for